Our generation has been disenfranchised. They expect us to invest in Nike and put more kids in sweatshops.
Yeah.
They expect us to invest in Lockheed Martin just to send missiles out and start wars and kill people.
Yeah.
Our generation is saying, first of all, why am I going to invest in this index, which some of the companies in this index go against my core beliefs, and I don't want to support them and profit from what they're doing. And then at the same time, the upside is so limited. Like at any time, the market could collapse.
They've gone through venture capital, pre-seed, seed raise.
You are the exit liquidity.
Reg C, Reg D. It's like, oh, and then finally, after like all the value has been generated and distributed to like the insiders, like, hey, like you can go. Come here, peasant. We'll give you permission to buy this on this, stock,
Exactly.
your brokerage account or whatever.
That setup has completely...
We got to protect you from yourself, It's like, we're your daddy. We're going to decide whether... But you can go to, like... This is what makes me laugh. It's like, you can go to a fucking gas station and blow your whole paycheck on scratch-offs. You can go to a fucking casino, get fucked up, and waste all your money. You can do all this shit. You can gamble where they get their little tax revenue from it. But, like, if you want to, like, actually invest in a friend's business idea or do something... I mean, like, this idea of, like, paternalism that the government knows what's good for you. I mean, this shit has got to end, and we have to push back on this because this is just such utter fucking bullshit. I mean, that's the way I think about it.
That's exactly what crypto is. Yeah. Crypto is the pushback. Yeah. Crypto is, I'd rather start with a brand new company in an unregulated forum that allows me to get on the ground floor and allows me to establish something that has potential to change my life.
I'd rather buy a picture of a fucking dog token and say, fuck you.
I mean, that's worse.
That is wild.
I'm more DeFi. I'm definitely not an art guy. Yeah. Beauty is in the eye of the beholder, so pay for the art whatever you want, but I'm not going to buy any art. But I do believe that the internet economy, that decentralized finance ecosystem is real. Yeah. And I believe those governance tokens that would be more than governance tokens if there was a little bit of innovation in there that was allowed and also applied.
It's kind of, there's this perverse element too, where like any kind of token or idea that actually has real utility, like gives the holders like real like benefit or accrual or fees or whatever, like that's a security. So like what we're getting instead is like these pure and utter fucking bullshit coins or whatever, right? Which they don't have to worry about. They're literally saying this is a fucking meme. Fuck off. Like there's no really value here. It's a picture of a dog. If you think it's funny, haha. You know what I mean? Like whatever. Yeah. But like the other coins that actually, they're trying new ideas or different things or different governance, like they got to worry about the actual SEC coming down on them. But grandma can buy a picture of a fucking Shiba Inu or whatever.
Yeah. I mean, it's right? The legitimate business is ostracized, and then the scams are brought to the forefront.
Yeah, it's crazy.
And the solution of the government actually makes the problem even worse. Yeah. But this is our generation's kickback. This is our generation's way of saying, I'd rather take a chance on dog whiff fart than Nike, because dog whiff fart, I could turn 1,000 into 10,000. Yeah. And in Nike, that 1,000 isn't going to turn into 3,000 in the next 10 years.
Yeah, not wrong.
So why the hell am I going to? I want to get ahead in life. Yeah. And they can't get ahead in life. Nobody can get ahead of life because of the abuse of the system.
Yeah, no, you're right. It's institutionalized, constant debasement and, stealing purchasing power through inflation, printing money, essentially.
By the way, they lie about it. I'm about to blow your listeners' minds.
Welcome back to another episode of Cypherpunk'd. Today we are joined by CJ Constantinos, founder of People's Reserve and a 10-year Bitcoin veteran who sees Bitcoin as the reserve asset of the internet economy, the most pristine form of collateral in the world. He's also never been to Epstein Island. So, CJ, I remember, I think it was maybe like 3 or 4 years ago at one of the Bitcoin Day events, you asked me, when I first met you, I was speaking about like a mining panel or something like that, and you asked me a question, so that's how I remember you. So you've been in the space since 2014. Wait, what drew you into Bitcoin? What made you decide to go all in?
Yeah, so actually I had a mentor, Jeff Berwick, calls himself the Dollar Vigilante. He's still around today, but it's wild. Some of the stuff he says is wild, but I will always appreciate him for orange pilling me.
Oh, really?
And waking me up to Bitcoin and kind of just teaching me like all the things I learned in school are not necessarily how the world really works. And I think when you come out of like high school and you're in college and you're in your first couple of years where you're not really, it's just under classes and you get to this space where you're like, what's going on? Like, what am I really going to do? What's the real point of this life? Like, what's my mission? And learning what I learned in school, it didn't fulfill that feeling like, oh, I'm going to leave here and I'm going to accomplish my mission. And studying accounting and then later finance played a big role in me having that kind of, I'll say brainwashed. Like, I'll even go that far. I'll say I had a brainwashed mindset, and I needed to be woken up from the matrix, right? I needed to be not so naive and understand that, hey, some of these people that you trust, some of these entities that you trust, like banks and governments, even though you were taught that they have your best in mind, they don't all the time. And they'll lie to you, and they'll steal from you, and they'll exploit you. And that kind of like shattered my worldview. Like, that's how naive I was in college. I was like, oh, everybody's, here to help everybody. I'm here to get my degree so I can get a great job and make lots of money, And then the more and more you're in it, you're like, this isn't going to turn out that way. Yeah. And I don't think these people are telling the truth about this. And he was the kind of person who delivered that to me in a soft, easy way. And then, of course, I took it in the hardest way possible and completely had a mental breakdown. So, he delivered it softly, but I mentally broke down. And once you get that orange pill in you and you start to see, whoa, this is truth, you become addicted to it. You just want to know more and more and more and more truth. So the people who I thought were my friends, I grew away from them because I wanted to talk about 9/11. I wanted to talk about some things that nobody else felt comfortable talking about. And it got to the point where it's like, all right, CJ, whenever we talk to you, it's either a conspiracy, Bitcoin, or the Bible. We literally don't want to be your friend anymore. I'm like, oh, okay, no problem. So I feel like that was like the Lord's way of just bringing those people out of my life and bringing me into a new an of like truth discovery. And then, of course, when I stumbled upon Jeff and he put some of those pieces together, Bitcoin is truth money. That's one of the things that I haven't had the honor to preach a sermon called Truth Money because it's just so powerful. I really do believe, I don't go as far as Max Kaiser and say that Bitcoin is God. I think he just does that to create attention, right? I think if you talk to him on a personal level, he knows that. But it is of God because it's truth, and God is truth, and it's a derivative of truth. And that truth money empowers us, and it branches into every aspect of life. And that's the part that's still, even today, over a decade after being in this industry, I'm finally learned you can never be a Bitcoin expert. Nobody can be a Bitcoin expert because the more you learn Bitcoin, exactly. And all of those rabbit holes are like, you could spend a lifetime studying how to apply Bitcoin to make this rabbit hole a better place. And it's just like, there's just so many of them. It's beyond what you can see with your eye. And that's what's so exciting. I feel the pendulum swinging. I feel truth money entering the stage. We see the strategic Bitcoin reserve with Donald Trump. If that goes through on the federal level, we just saw Dennis Porter come out today and say 10 different states are going to do it.
Yeah, I mean, Dennis has been pretty active in the space. Have you seen, I think it was today, Paul, I don't know if you can pull it up on X, but like apparently the government, before Trump gets in, they're already sending the Bitcoin to they're moving it to Coinbase. I mean,
10,000. Yeah, they moved 10,000. Or no, 20,000. Couple billion.
They are literally Trump says, hey, I'm going to do a strategic Bitcoin reserve. And all of a sudden they're like, oh, let's, I mean, these unelected bureaucrats who, should have no decision-making power whatsoever are, pulling the strings here and moving this Bitcoin and going to try to sell it. I mean, it's unbelievable. I
mean, they're trying to start World War III. And they're putting the missiles into Ukraine. They're doing crazy. These are the people who somehow, some way have gotten into power. And I think that's really what the Trump movement is about, this new unity party. And that was my biggest attraction.
Yeah, I agree with you. I mean, a lot of people made the argument oh, I don't really like Trump and all this, that, and the other. But the thing is, this election was so consequential. I feel like it's the most consequential election I felt of my lifetime. And I voted for, the past 12 years, the past 3 or 4 elections. But this one just felt different, right? And then you just kind of saw that a bunch of former Democrats and people across the aisle and, whether it's Tulsi or RFK Jr. or Elon, Vivek, just all these different good people, even Ron Paul getting in on the Doge action. I mean, it's so many good ideas, so many people with don't necessarily agree on everything, But, you can just see that they were on the side of good, the side of truth in a lot of ways. That's literally how it felt. And they were willing to say, hey, let's, there's something much deeper going on here. Whether it's the surveillance state, whether it is the perpetual wars and just that going on, this neocon agenda, et cetera. And they were willing to just kind of say, hey, let's put our differences aside and work together because we want to make the world a better place, even if we don't agree on everything.
Right.
And I think
this is the first time I felt hope.
Yeah. Yeah.
Because I'm in the same voting block as you. I did the same thing. So I don't have too many votes under my belt, but never have I felt the importance of something so much, because that pendulum swung so far. Yeah,
it was wild.
That it's like, if it keeps going,
gaslighting and the media. It's like
the next step was literally tyranny. The next step was, if your gender isn't what we say it is, then you go to jail.
Yeah.
Like that. What's that? The Office or something like that. That guy from Venezuela. He's like, you walk in the street, straight to jail. Don't pay straight to jail. Straight to jail. Like that's like where we were going. It was straight to jail for everything. But now we have this hope. And it's an even more powerful hope, in my opinion, because it's connected to Bitcoin, and Bitcoin is kind of like this little Trojan horse, where it's like a financial asset. It's an emerging digital asset class.
Have you ever read that article by Alex Gladstein? Bitcoin is a Trojan horse for freedom. It's one of my favorites.
I haven't read that one. Yeah, I know Alex, but I haven't read that one.
Fantastic article. I highly suggest reading it.
Oh, I have to.
Actually, you're going to be speaking at our Bitcoin meetup later. If you're in the Discord, I've added it to the resources, so I'll show you.
Oh, okay.
Check it out. It's well worth the read.
Yeah, I definitely will. Actually, speaking of Trojan horses, though, I think this is really interesting that in the marketplace doesn't talk about this at all. I always thought that Bitcoin would be what brings down central banking, but after I dived deeper into the problem, I realized that banking is really not the issue. It's fractional reserve banking that's the issue. Are we going to go into a world where there's no financial products? We're on a Bitcoin standard, but you can't get a mortgage. Mm-hmm. You're on a Bitcoin standard, but your business can't borrow against your future cash flows. That doesn't make sense. The world of finance isn't going to disappear.
Welcome to being a crypto entrepreneur for the past 4 years. No access to banking services. Sounds about right.
Yeah. Well, man, that's another thing. That tailwind is, or that headwind is now turning into a tailwind. Thank God.
I've already been living in that world.
Yeah. So, and you've been in it longer than I have, and it is rough. It is very rough. It's a testament to your courage and your fortitude to move forward and do what's right, knowing that you're building a better future. And now we can do that, and that's what we do at People's Reserve. But I always thought, Bitcoin was going to be that Trojan horse. I think what I see coming down the line, though, is actually stablecoins. Stablecoins are actually the Trojan horse for fractional reserve banking. So I think stablecoins are actually going to end the fractional reserve banking practice. I think it's, number one, it's out of necessity, and number two, it's probably out of a false sense of innovation. I get right. It's just a derivative. What's the difference between a stable coin and a dollar? Nothing. It's a derivative of the dollar, so it's still fiat. But the problem really goes back to that fractional reserve portion, where you can't just extend credit, because credit extension is one form of inflation. And when the U.S. Treasury extends credit by issuing bonds, that's inflation. That's the creation of currency. Mm-hmm. So people need to understand that credit and finance play a key and critical role in inflation. It's not just like the Burr meme with the cash rolling out. There's barely any cash anyway. It's all digital anyway.
Yeah, I think something like 98% of all money is just
Yeah, there's barely over $1 trillion actually physical cash.
So 98% is it's not on a blockchain. It's not anything. It's just
a number in a ledger.
A number in a ledger that's in a centralized bank server that gets hacked perpetually
with no proof of work.
Time. That can just go into bank accounts and change numbers. And
did you see
the numbers never balance
what the incoming Treasury Secretary of the Treasury said from Trump?
Scott Bessent?
Yeah.
What did he say?
He came out and said that it's interesting that we had this war on crypto, and they went after the FTX collapse because they were laundering money, and the money was funneling through, and that's why a lot of those donations came back into the politicians' pockets, which they never clawed back, by the way. Clawed back everything else, but not those donations. But
have you seen the Act Blue, all this Act Blue stuff too that's popping up? It's all these grandmothers who would make $5,000 a year in Social Security, donating $30,000, $50,000, $40,000, $60,000. like,
Unbelievable.
thousands of payments. I mean, it's just total fraud, total bullshit.
Yeah, I think it's
money laundering. I mean.
Yeah, exactly. It is, and he called it out at the highest level. I mean, this is the guy who's going to replace Yellen.
No,
and he's
I love this guy.
making a statement like that. That's what gives me hope. That's the type of thing. We're getting people in these power positions that understand the dynamic.
Yeah.
They understand the level of the fraud. And I think Doge, like this is just my random thought. But wouldn't it be amazing if all of the government spending were transacted on forced to be transacted on a public ledger?
It should be. I mean, I don't understand how.
And
it's not.
Elon's going to push Doge for that.
It's unfathomable that there's no accountability. The Pentagon fails audits every single time. We have no idea where this money's going.
Trillions of dollars. Trillions of dollars.
Yeah, it's
sickening.
I had a guest on yesterday or a couple days ago. His name is Mark. He was a former banker, and he was just talking about his time serving in the military and all these different government agencies, and he was talking about how at the end they'd get a budget, and they might at the end of the budget with a week to go, they might have $200,000 left within the budget, and it's if they don't spend that money, their budget the following year goes down. So what they do is, instead of just saying, hey, let's not waste the taxpayers' money, they turn around and just spend $200,000 on just whatever bullshit they can come up with, $10,000 coffee machines, whatever it may be, just to make sure they can keep that budget for the following year,
right? Which
is insane. And I've had people in my office before that work in different departments, and they said the same exact thing. They were all laughing about it, bragging about it, and I just think there's just a disconnect there of realizing what they're really saying is hey, fuck the American taxpayer. Yeah. We're just going to exploit the system, and I don't think that crossed their brains. I don't think they were thinking about it because they were so far removed from just thinking about that thought process, but. Really,
I would say
crazy.
In the beginning that's true, but I would say that I think Elon and Vivek are going to find a lot of fraud.
Oh, I mean, unfathomable amounts of fraud.
If those people are sitting and saying, "Oh, I got $200,000 to spend," okay, well, you know what? We need a report on this, and you know what? My wife happens to have a consulting group that does that work.
Yeah.
And so you know what? $200,000 on that report makes sense, and it finds its way somehow, some way back into their network of people, and that's not right. That's the problem. If Elon can drill that out, we might
corruption.
have hope.
I mean, there's so much of that. I mean, paying $25,000 for screws on planes. I mean, it's just absurd. Yeah. Every screw is $25,000. I mean, this is just the kind of insane stuff that's happening, and there's just so much grift, so much fraud.
Even if you eliminate all that,
all these
fraud,
politicians too, on their their annual salaries of what they fucking make. I mean, it's
they're better than the hedge funds.
I'm worth $200 million, and my annual salary is $100,000. It's what the fuck?
Nancy Pelosi is the only one who can successfully trade Bitcoin. She's the best Bitcoin trader in the world.
Jesus, I mean, it's
the hedge funds are seething with jealousy when they look at her portfolio. But
I don't know. I saw a funny meme the other day. I was I don't know what's better. A better trader is it Nancy Pelosi, Hillary Clinton, and their corn futures, or is it inverse Kramer? Whatever Kramer says, the opposite.
Inverse Kramer is hard to beat.
Yeah, that's what they were saying. As
So even if they get in there and they eliminate all of this fraud, right? They eliminate all of this waste. They come up with a solution to if you don't spend your budget, it gets reduced. They just figure out a way to optimize.
There's got to be some incentive to not spend the budget. I mean, I think it's maybe hey, your budget is naturally going to go down over time, but if you don't spend it, you get to
maybe we'll give you more money.
Yeah, something like that.
Because you properly manage and save money, so now you can expand in your department and be more efficient and more effective rather than losing. Yeah. Reward the people who overperform and save money.
I mean, even if you gave that department a small raise if they didn't waste their budget, I mean, something like that where it's instead of wasting $200,000,
watch how much money they'd save.
That's what I'm saying.
Watch how much money they'd save.
Hey, you got all these government workers and, hey, we're going to give you, instead of giving you a 1% raise this year, we're going to give you a 3% raise depending on how much of your budget you saved. You know, something crazy where it's instead of wasting, it might cost the taxpayer $30,000 instead of $300,000,
Well, the fact that you and I, who are completely detached from this situation, can come up with such common sense answers shows you that it is fraud.
Yeah, no doubt.
And my biggest concern, though, is that Elon gets in there and eliminates the fraud and eliminates the waste and does what he does best and makes it more efficient, or maybe even the most efficient it can be. The problem with the budget is that you can delete the entire government and just the entitlements plus a few other topics. So health costs, Social Security costs, military net interest expense, all of the sum of these costs are greater than what we bring in taxes. You can eliminate the entire government, 100%. FBI, CIA, every 3-letter agency that there is. Everyone.
There's a lot. There's like
eliminate them all.
Out there's like 400 or 500. Like more. There's more 3-letter agencies than years since the United States been established.
It's ridiculous. If you eliminate them all, we still have a budget deficit. So we're still going to have inflation. You're still going to need to create credit extension through the issuance of bonds to pay for the deficit, because the money you're bringing in is not covering your costs. And the way you cover your cost is through bond issuance. And that.
What about the argument of like growth, like GDP growth, like actually taking the shackles off and letting this economy rip? Like instead of debanking, tech startups and stuff that have like generated trillions and trillions of dollars of revenue, why not just like, and it's a crazy idea, but instead of like using the government to like go after your political opponents and cut off their access to banks, what if we just like said like, hey, like just treat them like any other business in society, let them get loans, let them have banking access, and let's not try to, weaponize 3-letter agencies like the SEC, the OTC, all these different agencies to destroy, companies that are generating revenue and employing tens, hundreds of thousands of people.
Yeah.
Why don't we just like take the gloves off and like let
capitalism
like work, right? Because then it's like instead of the same pie, we can actually like double, triple, quadruple the pie, right? And it's like then
Elizabeth Warren's brain is melting right now.
Oh my God! I mean,
I could feed the world with that pizza, right?
I mean, seriously. I mean, like let's close all these loopholes. Let's just have something simple: 10% flat tax, first $100,000 adjusted for inflation. This is my idea. First $100,000 everybody makes adjusted for inflation, 0% tax. Anything over that amount, 10% flat tax. Keep it real fucking simple. Treat everybody the same. It's completely equal. And I think if that happens, I think the explosive growth in like America would be insane. I mean, we would grow by 5, 10, 15% GDP. I mean, we'd see some pretty astronomical numbers. But, of course, that's just common sense that it won't happen.
Yeah. Well, the thing is that I do agree with everything you just said, but also that is like the Keynesians' main go-to. Like, it's growth, it's growth, it's growth.
Uh-huh.
We're $36 trillion in debt. We have $220 trillion of unfunded liabilities. You would need about 50 Apples to come. You would need 50 more Apple companies. Like, there's one Apple for a reason, because they're very unique and they're very successful because they've captured so much market with their technology. You would need 50 more of them. So I'm not sure there's enough industry to allow growth to do that. But I do think you're right. What you said would absolutely help solve the problem. But we need something else on the asset side of our balance sheet. It can't just be the economy.
Yeah.
We have a lot of resources. The problem with these resources is that you have to invest billions of dollars over the course of sometimes tens of years to unlock these sources of value and make them liquid, right? So we have oil, we have gas, we have rare earth minerals.
I mean, that's part of the plan for sure. They're going to tap that.
You got to unlock. We're going to have to.
I think they're going into Anwar and they're going to do it in an environmentally safe way. But yeah, I mean, I agree. You have to.
We have to unlock that because of the pace of the growth of our liabilities. Because our liquid assets are now in danger, because now it's the economy, right? It gets back to debt to GDP. So you look at debt to GDP ratio and you start to say, wait, our liquid wealth that's created by the success of our economy through tax revenues is not growing as fast as our liabilities. And to be honest, do you want to sell Alaska back to Russia? No. We don't. Some of these assets have value, but you don't want to tap into them. You want to save them. I'm perfectly happy with buying oil from the Middle East. You know why? They're going to run out of it first, and then they're going to have to buy it from us when it's worth more. You see what I'm saying?
Yeah.
It's a long-term game here. But I think the thing that we're missing is the U.S. government borrows $1 and invests it into the economy and gets less than $1 worth of return. Now, what asset class on the asset side of our balance sheet can we invest $1 in and get more than $1 worth of return? Yeah, we have rare earth minerals and oil and stuff, but that takes time and large amounts of investment. Maybe you break even or the margins are very tight. But now, can you put $1 into real estate and get more than $1 back? No. Can you put in the stock market and get more than $1? No. That's barely keeping up with inflation, right?
Yeah.
So
the real inflation,
and then,
not the one they.
Yeah, the real inflation, right? Now, enter this magic internet money. It's a brand new emerging digital asset class. It's engineered money. It's the first form of the engineered version of the natural. We have the candle, and we engineer the light bulb. We have the horse, and we engineer horsepower in the engine. Mm-hmm. We have newspaper and writing and we turn it into strings of code that show it on our device.
Yeah.
Well, then we have natural money in gold. Now we have engineered money in Bitcoin. It is a huge technological shift that we're going through right now in the realm of finance. And Bitcoin is what you can take and put on your balance sheet and borrow $1 to buy and get more than $1 worth of return. Bitcoin, and I think specifically people's reserve Bitcoin bonds, are how we can recapitalize the republic. It's how we can make the asset side of our balance sheet growth of that asset side outpace the growth of our liability side. And I think what you said and what Elon do also plays a critical role.
Yeah, it's going to be a combination of all the above, right?
All of the above. There's no one fix. You need to let the economy grow, like you said. You need Elon to reduce those liabilities and become more efficient. And you need Bitcoin on the balance sheet. And if we do that, you get a stronger America, a stronger dollar, and that's an interesting concept, because now all of a sudden Bitcoin is backing the dollar. Bitcoin is helping the dollar expand. And Trump said that he would expand the dominance of the dollar through stablecoins.
Yeah.
And that's, if we don't do it, China's going to do it. If we don't do it, Russia's going to do it. BRICS will do it.
That's kind of like the one thing that's the one advantage America really has here, right? Because China has their 100-year plan, right? And their 100-year plan is like, you can look at them. I've kind of been looking into this. Like they're accumulating all this gold. They're going over, they're exploiting it from Africa. They're exploiting it from South America. They're sending it all back to China. I mean, they want
with
to.
debt, by the way.
Yeah. I mean, their plan is like, hey, they're accumulating all this hard money, this gold, and it's worked in. That's part of their like 100-year plan. But like, how awesome would it be if we just like were able to just totally cut that off, make Bitcoin the future, global reserve asset for the world. Gold's great and everything. I love gold, but like, it's a hedge, right? You want to have that physical hard money, but Bitcoin is obviously, like you said, the candle to the light bulb, the horse and buggy to the car engine. It's just better, right? It's like the printing press to the internet now of information. Same concept here. We got to make the game theoretical play, create this strategic reserve of Bitcoin, and then the whole world will follow suit. It's just game theory, right?
Yeah.
And I really do think that is the play. I mean, that's
by the way, that is, I'm not sure how other people view it, but in my opinion, that's the monetization of Bitcoin. See, when Nixon took gold off the dollar, back in the dollar in 71, that was the demonetization of gold. Now the free market still understood its value and value proposition.
Yeah.
But as a hedge against currency debasement for the more sophisticated investors, most people missed out on that trade. But with where we're going, you have to think to yourself, wait a second. If this happens and the federal government has a strategic reserve, the states have a strategic reserve, cities have a strategic reserve, municipalities have a strategic reserve. It's even going to come down to the business and personal level, because if you don't have it, you're not going to be benefiting through its engineered value proposition, and you'll just be outcompeted. And we are now seeing an acceleration into that moment. And I think it's really important for price discovery, because some of my listeners know that I created the Bitcoin fair value algorithm. Miners use it to optimize their treasury management systems.
Tell me a little bit about that. That was actually one of my questions.
Yeah, so it's a lot like gold. Bitcoin is a lot like gold when it's a commodity. And right now, it is a commodity that trades within a commodity cycle. And that commodity cycle is based off of its engineered design. We have proof of work consensus, absolute digital scarcity, and the difficulty adjustment. I look at the difficulty adjustment as like a decentralized coded Federal Reserve. When the hash rate starts growing super fast, if the economy is growing super fast, the Fed will come out and raise interest rates. Well, if the Bitcoin network is growing too fast, the difficulty adjustment will raise the difficulty. And if it's shrinking in the same way, if the economy is shrinking, the Fed will lower interest rates, try to spark some movement. And the same way, if the hash rate is shrinking, difficulty will come down, making those existing miners more profitable. And with that understanding of a commodity cycle, I designed the BFV algorithm to help miners properly manage their treasury, because at some points in time, people don't realize this, it's not always profitable to mine Bitcoin. There are times where your cost of production is actually higher than the market price.
It's definitely something that needs to be managed. So we just recently started this curated mining thing where we obviously we have our own miners and we're deployed all over the place, but we started this aspect of our business where we're doing like curated mining LLCs, where we work with a partner investor. We deploy, they fund the capital, we deploy, using our expertise, our network. And, I may have 100 deals come across my desk on a daily basis, and I might pick like 3 of them, right? Like the best scenario. But that is a very useful indicator to look at, right? Because some deals have different economics, right? Different types of miners, or different electricity rates, or different uptime, different energy sources. There's all these factors that play in. So
that's one of the reasons
I try to make it so I try to make the deals I select are like, hey, they might not like rip to the moon, all the time, but like you're always going to have that protection, that hedging, that super low electricity rate, maybe with a profit share with the host, or a situation that kind of just ensures that we're in the green here.
Yeah,
almost always.
Well, your experience is that's where that's coming from, because most people do a couple calculations, plug it in a calculator, like I'm gonna be rich. This is gonna be great.
Yeah,
and
so even in the last cycle, when all these like publicly traded miners were taking out loans to buy. Like Bitcoin miners, like at like $15,000 a miners, like I'm like, oh my God, what are these guys doing?
Yeah, it's dangerous. You need to
like
know.
These same miners,
because they have a cash treasury,
$2,000, like
How do you deploy that cash? Yeah. That's the kicker.
So like we're still in this like kind of like sweet spot where we can deploy. So like we've probably deployed somewhere between 3 and 6 million in the past 12 to 24 12 weeks. Yeah, I mean, like there's a strategic time where like the miners they're starting to tick up here in price, and the economics are changing a little bit. But when Bitcoin breaks 100K and blast, you see that God candle to 120,000. I mean, the miners' prices are gonna be repriced significantly. So
all of a sudden, those door stops are worth something.
Yeah, exactly. No, you're not wrong. You're not wrong, right? So even a lot of the guys that deployed when Bitcoin was at 60,000, and I was able to purchase them, more miners, better quality miners, et cetera. Those miners are now worth significantly more than what they were when we purchased, and they've mined all this Bitcoin, and they're sitting on these unrealized capital gains, and they got this huge equipment depreciation write-off. So there's a lot of factors that play into that. But
yeah, definitely. And
it's a rabbit hole to go down. A couple different rabbit holes.
It is a big rabbit hole, but to me, it's not only valuable to the miner, it's also valuable to the investor. And that's where the TradingView indicator, which popularized the whole thing, came from, which is the one question you need to answer as an investor is what I'm buying cheap or expensive, right? And that's just exactly what you described with the premiums on the miners themselves. You don't want to buy them when there's a big premium and they're expensive. You want to buy them when everybody's scared and they're at a discount.
I think Bob Burnett has a great, we use it in our slide deck. It's called like the Bitcoin mining trilemma, right? Like 2 out of the 3 things are always available, and the third one's like always hard. So like when the miners are at a great price and the energy costs, like the hosting facilities have open rack space, et cetera, like great deals.
Price is
like
shit.
The capital is like hard to get because nobody wants to go in, but that's like the best time to like just pound and set up your operations. And then, obviously when the price of the miner starts to go up, now you've got bad pricing. The capital, everybody wants to get in, and it's kind of funny.
Yeah, but that's actually a really good. I've seen that before. I'm a fan of Bob.
Yeah,
but I think
Bob's got some good.
That mindset. Oh, the best. That mindset, along with our treasury management strategy, is a winning solution for Bitcoin miners, because you properly lock in your profits, but you also properly deploy your cash. And it's a balance. The business is a balance between the two. Ultimately, those investors, some of them are looking for Bitcoin back, but some of them are looking for cash. Some of them want cash flow. So depending on what that ultimate strategy is, it does make a difference whether you employ BFV or not.
No, that's a fantastic point. With BFV, do I have am I able to change certain energy price, am I able to play around with the features, or is it kind of you have it pre-configured and set?
Yeah, no, it's actually completely customizable.
Okay,
because
fantastic.
The whole purpose of it, and I know you know this, but probably a lot of the listeners have no clue. Most Bitcoin miners have no idea what their cost of production is. None. They cannot narrow it down. And then if they try to say what it is, they're going to be talking about their electrical price. They're not going to be talking about operational expenditures, because you need land, labor, and material. That's operational. But you also need capital expenditure to get the machines and build where you're at on that land. So when you take into OpEx and CapEx, now you get an all-in cost of production. Yeah. And I want Saylor, I hope Saylor, if you're watching this, like the Bitcoin Mining Council, we should be doing better than gold, right? Bitcoin is engineered money, gold is natural money. Well, then we should hold ourselves to a higher standard. The World Gold Council makes all of the people who are part of that council, they have a reporting requirement called all-in sustaining cost. And it's helped to shed light to investors in the industry that say, yeah, we're part of the World Gold Mining Council, and to pull out an ounce of gold from the ground and send it to market, it costs us $1,400. Okay, well, with the price almost double that, then we have some solid margins. But then you look in Bitcoin and you see some mining companies are saying, oh, we can mine Bitcoin for $6,000 a coin. No, you can't. Maybe just your electrical cost.
Yeah, maybe just.
But what about your land, labor, material, and that? Oh, by the way, the $500 million facility you just built, was that not part of your cost? You see what I'm saying? So cost structure analysis is the basis of BFV. We come in, it's completely customizable because you have to understand your cost basis. And once you understand your cost basis, you understand where we are in the commodity cycle. Because if price is below your cost, you're at that discount zone. And if price is above your cost, you're in the premium zone. So lock in premiums and deploy those premiums in discount zones. And if you do that, and BFV is one of those things that sends like a signal like once every couple of years.
Yeah.
There's a lot of indicators where it's like, I got 30 indications today. Like if I'm not bot trading, like this is impossible. Like cancel. BFV is like the opposite. It's like, am I getting scammed? Like I haven't heard from this thing for like a year, because these commodity cycles, they take time. They take time to go from that fair value to a discount, back to fair value, then to a premium, and then back to fair value. And if you ask that question, is it cheap or expensive? Are we at discounts or premium? It's going to be really hard to fail. And not just at mining, at investing too, right? If you have a real estate property and it's a foreclosure and you're buying the property for less than it costs to replace it, that's a really good deal.
No doubt.
But if you could build it for $300,000, you're buying it for $9 million. You might want to hold off or look somewhere else, So buy discounts, sell premiums is the whole premise of that.
Sounds like buy low, sell high.
Yes, absolutely. But from a cost structure analysis, and that's the other thing that people get confused about. They say, well, why is BFV this value today and the price not? Because your cost has nothing to do with the price. The market price is a separate metric that should be related to the
related,
cost price.
But lagging a lot of times, and certain factors change. Absolutely.
So, and that's that's where I got my rude awakening with the difficulty adjustment. But I've learned so much from the difficulty adjustment. Literally, my entire Bitcoin management strategy is based on the difficulty adjustment.
Yeah, no, I think it's very interesting, and you. It seems like you've done a lot of work since you asked me that question at the mining conference a couple of years ago. It was like, you were. It seemed like you were very new at understanding the dynamics of mining, but like you said, there's so many different rabbit holes you can go down.
Oh, it's wild. It's wild. But I love BFV. You guys can follow it on. I have a Twitter at BTC Fair Value. I post charts every once in a while. Some people get antsy and they're like, post a chart. And I'm like, man, I don't have time to post a chart.
How do we pull up the indicator on here, Paul? Can you pull it up? We can put it on the screen.
Yeah, so my last update, I said, and actually what you can do is, there it is right there, yeah. What you can do is if you just follow my most recent, there's a good rabbit. We were just talking about rabbit holes, right? So there's the Bitcoin fair value rabbit hole. That'll be fun to go down for your listeners.
When it comes to Bitcoin, the best way to answer that question is taking the market price and relating it to the cost of production price. The red cloud is the cost of production cloud. The bottom of the cloud is the electrical cost. The top of the cloud is the all-in cost. This is about creating a baseline. And the baseline is based on the cost of production. And a lot of people say, well, that's the labor theory of value. No, it's not. It's business 101. Because if you believe in the value proposition of a product or a service, you must pay above the cost in order for that business to continue to offer that product or service. And if you don't want to pay above the cost, then that means that the product or service is not delivering value. Therefore, that's the free market price signal signaling to the producer, stop wasting your resources. Produce something of more value, of greater value that can bring in a profit because people are willing to pay above the cost. If people aren't willing to pay above the cost, that's the market signaling to you that what you're doing doesn't deliver enough value. Redirect resources.
I think you just blew Joey's
mind right there. A
right
lot of people ask me, they're like, CJ, how do you, what's your strategy? How do you do this? My strategy is let Bitcoin do the hard work and just answer the question. Is it cheap or is it expensive? And this is a basic commodity cycle, by the way. This is true to every single commodity in the world.
This next part's amazing.
There's no difference for Bitcoin. The only difference for Bitcoin is look at the bottom red line. Notice that bottom red line is going up. There is no other commodity in the world where its cost can be increased by the commodity itself. The difficulty adjustment as hash rate grows and the difficulty increases, right? Price drives hash rate drives difficulty. Difficulty drives cost. So yes, it's very fun to talk about the 20,000 peak and then the 14,000 through the expansion phase going into the halving, and then the 70,000 peak and the expansion phase we're going into now before the halving. It's very fun to talk about the tops, but what's more important are the bottoms. And Bitcoin is the only commodity in the world that can raise its price floor, because as in any other commodity, as the premiums grow, the supply expands. Bitcoin supply can't expand. And then a lot of other commodities, you know, Jeff Booth is really good at pointing this out. There's technological deflation. So the technologies make you more efficient and the cost of production actually goes down. But for Bitcoin, the cost of production goes up. It was engineered. It was strategically designed to leverage the natural laws of economics, commodity cycles, and price discovery to empower we the people. And this algorithm is based on that understanding of Bitcoin's engineering, and you can't beat it. One last thing I'll say is if people go on and they read that BFV report, I give you an exact mathematical example. I fill out the equation with the real world numbers.
We open
back
source
on
that.
May 5th, 2020, when I published that report, and I show you what happens after the halving. So you can see how each variable changes after the halving and why the halving is actually the catalyst to a new price discovery cycle, because it's based on the new cost structure economics of Bitcoin, the only asset in the world that can raise its own floor price.
So you and I know that halving doubles your cost overnight. And a lot of people don't understand that.
Yeah, the game theory is just it's there's like we said, so many rabbit holes to go down, but like this game theory was just so expertly designed by Satoshi.
Yeah.
And there was so much like if you go back and read a lot of the old forum posts, I mean, you'll just see the discussions of all this. Like
I learned this from those forum posts because it was Satoshi's one post where he said that the cost of production tends to go down over time. But with Bitcoin, as the price goes up, the cost of production goes up. And now you talk about free market economics where the cost of production is the cost to access the value proposition of the good or the service. So if you and I start a business and we say, you know, for this service, you have to pay $1,000. And people say, well, I'm not getting $1,000 worth of value. I'm not paying that. That's the free market telling us there's no demand here. But for Bitcoin, the cost continues to go up through its design. Therefore, the network itself is demanding more from you to get its value. So it literally has the ability to raise its own floor price. That still baffles my mind. It's absolutely unbelievable.
Yeah, this is Satoshi had many posts about this. It's fascinating. I mean, there's so many rabbit holes. Like, so when we talk about the halving, you know, all of what you said is true. What are your thoughts over time as the halving becomes less and less impactful supply-wise, right? Because every year it's less of the overall supply, and as fees change over time, have you figured out a way to model in fees in the BFV over time, like miner fees, transaction fees? Because that, from my understanding, is the network has grown over time, and those fees have gone up some.
Yeah. So the security budget discussion is a very important discussion for everybody to have. And I think what happened with Runes post this 2024 halving was interesting because we saw fees were actually larger than the block reward.
That's wild. Very briefly, but wild.
Briefly, yeah.
Saw that when I was mining Ethereum.
You saw when that demand is there.
Yeah.
The fees can move up rather quickly. So I think the potential for that demand for settlement will eventually create those fees. But then the other thing I think about is that a lot of people use that argument to say that it's not important enough to play a role in price discovery. But the thing is that miners are forced sellers, right? Do you want to sell any of your Bitcoin?
I don't want to, but you got to pay the bills, right?
Yeah,
you know
exactly. So the forced price is at the margin. Whose margin? The people who have to pay the cost. Because when you buy Bitcoin, or at least when I buy Bitcoin, that's locked up. That's not getting sold no matter what. At all. Like there's so many Gresham's law, right? There's so many other assets on my balance sheet that I'm going to let go before I let go of that money.
Yeah, you want
that's
to
the last
spend
thing.
Your USD, spend know, whatever else.
That stays in the family forever.
Yeah,
that's my mindset.
Yeah.
I'm not forced to sell it ever. However, miners are forced to sell. So the price is discovered at their margin, and they have to ask for a price above the cost. So this just comes back to free market price. I think this is what happens in our education system. We don't understand the basics of prices.
Well, they don't even, again, if you watch my first 10 episode series was with Aaron Van Weerdum, who's the chief editor of Bitcoin Mag, and we're talking about his book, right? And talks a lot about Austrian economics and spontaneous order, prices, all of these different, Austrian economic principles that you just don't learn this at school, right? They don't want to teach you that at school. You learn about, Milton Friedman's acceptable. Like
the price is what I say it is.
Yeah, the price is what I say it is. You learn about Keynesian economics. You learn about Milton Friedman and his version of free market, right? Which everything can be a free market except money in his version. Like that's an acceptable, school of thought.
Yeah, it's just wild to see. But the fact is that this is how it works, and the people who use BFV and follow along with it, I mean, they'll testify to that truth, that this is really, we are trading in a commodity cycle. But I have to say, I do think this is going to be less and less relevant. I really do. And that's part of the reason that we open sourced it. You see a lot of people in the industry who like sell indicators and stuff like that and try to make money from it. But it's probably because they never actually made money with their own damn indicator.
Yeah.
Right? The people who actually make money with it, what we found out was that, hey, yeah, you know what? When Bitcoin becomes monetized, we're not going to be in a commodity cycle anymore. The perpetual base layer of demand on Bitcoin will nullify cost of production.
Yeah.
And hash rate will have to catch up to price. Right now, price has to catch up to hash rate. When that flips and hash rate has to catch up with the price, we're in the monetization of Bitcoin. And I think that's what's coming. And we're no longer going to trade at it's that suddenly part, right?
So I'm in a good business then.
I think you're probably in the best business in the world. Yeah, absolutely.
I love it. I mean,
if you can make it through, if you can fight through the commodity cycles with proper management.
Yeah, it's tough. I mean, you have to be able to, you got to have, again, I've had a lot of experience over, multiple cycles. You learn these things, right? And the trick is staying alive in the when you see all those red clouds, right?
Yeah.
When the red clouds are out on your indicator, you got to be able to be scrappy.
And you got to be able to be aggressive, and you got to make moves to stay alive.
Yeah.
And you have to be that was the reason I did that, because it was so emotional for me. I needed to remove the emotion and just have the signal given so that I can make the proper choice based on the signal versus incorporating all of my thoughts and feelings and emotions, or else you're not going to manage it properly. Because at some point in time, you might do it right for a little bit. At some point in time, you make one wrong decision. And this is not the too big to fail industry. You make one wrong decision, you're gone.
Yeah.
There's no mercy. You are gone. You're not prepared for the halving. You're not prepared for continuous difficulty adjustments. See ya. Thanks for contributing. I'll buy your miners at liquidation price.
You're not wrong at all.
Thank you. Come again.
I bought many miners and many different
ruthless
things at liquidation
ruthless
price,
industry.
Right?
Ruthless industry. However, I do believe the people who make it through, like yourself, because you've learned from your failures, those people who are smart and are able to do that, you are going to be. There's just going to be so much profit that it's not even fathomable, because price is going to go so far above your cost, and the premium is going to be substantial.
That's definitely how it usually is when we really get into these huge bull market cycles. I mean, historically, and then when the red clouds are out, it's very squeezed, but you got to make sure you can stay above the cost.
I'm talking about premiums like BFV premium usually is around like 400%. So you get to like a 400%, that premium, you want to be locking in all of your hard work. You want to secure that proof of work and turn it back into cash and wait for the discounts to come, deploy the cash.
That's the toughest part, man. That is the toughest part, is like, when you're in that euphoria and everything is getting priced in and the market is accelerating, you got to be able to set aside some capital in USD or whatever to be able to redeploy when the discount window inevitably comes.
Yep. It's kind of anti-maxi mindset, but it's a business. And that's why I went with an algorithm, because you can't run a business based on emotion and mindsets. It needs to be well thought out.
Yeah. Yeah.
But what's coming are premiums that we've never seen before. The monetization of Bitcoin through the strategic reserve, funneling down like we talked before. We are now moving into the suddenly part. This is S-curve adoption. We are accelerating into adoption. And as we move up that S-curve, Bitcoin will not care about cost of production. And the people who are buying it will not care that they're paying a premium. Because at that point, it becomes a game of absolute digital scarcity. At that point, it becomes a game of, if I don't get my hands on this, I might not ever get my hands on this. And I think that's why what we see right now in the United States kind of telegraphing what we're going to do. You think Russia and China and India and the Middle East are not stacking Bitcoin right now? Of course they're stacking Bitcoin right now. It's people like you and me who've been in for a while and see 100,000 and are like, man, this could change my life. This could, and you start getting tempted by these big numbers on the screen. But who's buying from you? The reason the price goes up is because the market's trying to convince you to let go. The higher the price goes, the more they're trying to convince you.
That's an interesting quote.
They're going to come after you with $1 million Bitcoin, and it's going to come much faster than people understand.
Yeah. No, I think you're right. I think once that there's that supply and demand mismatch, and the demand is just exceeding the supply. I mean, it's like
nobody
it's
absolutely needs it until the strategic reserve is official. So this is my thought on it. I think Donald Trump comes out in the first 100 days and does an executive order, and I think he, by executive order, starts the strategic Bitcoin reserve by taking what we have at the DOJ, the 205,000 Bitcoin. Well, 290.
Do you think the swamp is going to get away with selling these Bitcoin before he gets in? What do you think?
I think so.
They're going to sell.
They already moved them.
Yeah.
They already moved them.
Wow.
It's what you said. It's Trump derangement syndrome. Trump could say, we should
sell Bitcoin, and then they just go to the market and buy it.
That's what
he should say.
Yeah, exactly. That is literally. I was going to go with a different one, but that is even better. I was going to say we should let men compete in women's sports.
Yeah.
Right, and then they'll come out and say, no, women can compete with men. That's not fair. That's not right for women.
Yeah.
And they'll just be complete hypocrites because they just want to do the exact opposite of what he said, like you said. So yeah, he should have said sell it, because then everybody would have been buying it in the government right now.
Yeah.
And we've got a head start, but we're falling behind. The last numbers I've seen is we have 205,000 Bitcoin in our possession. So by executive order,
how much does Saylor have? He almost has
he's over 400,000 Bitcoin.
Oh, he's got over
He
400,000.
has twice the amount of the
I thought he
United
had like
States.
200,000 or 180,000.
Not with these last.
Let's ask Grok.
He did a bond raise.
Let's see what Grok
And he did
says.
an ATM.
How many Bitcoin does Michael Saylor have?
402,000.
If he had, God, that just seems way high. There's no way.
402,000. Double what. And China has around 190 admitted.
I guess I'm not going to sell my MicroStrategy stock anytime soon.
No, don't do that.
So he personally owns 17,000. Wow, you're not wrong. Wow, they hold 402,000 Bitcoins.
Yep.
Wow. So what do I do with my MicroStrategy stock? What's your opinion on that whole situation?
Oh my goodness.
Well, I was in a lot of retirement accounts and stuff where I didn't have access to any Bitcoin exposure. So I kind of got lucky. I was just like, well, what the fuck can I buy? Oh, MicroStrategy, it's a profitable software company, and they're stacking Bitcoin. I guess I'll just move it all into that.
Yeah. That's what I tell people, and this is not financial advice, but what I would do personally, and what I did do, is if you have a 401k, especially if you're being matched and contributed, that's the biggest kickback. So if someone's retired, they have a 401k, you just go get a self-directed 401k and start buying Bitcoin. It's not a big deal.
Yeah,
you self-direct. But if you're still contributing and you want to get that match, there's just some type of math in their head that 60% CAGR isn't good enough, right? So they need that match, because without that match, they're losing. They're not, but you're just not going to convince somebody of that. They want to get the match because they calculate it into their earnings and salary and stuff like that. And that's what you do. You buy MicroStrategy. There is nobody else to buy. I wouldn't buy the miners. I would buy MicroStrategy, because what's happening
I own some Marathon as well, and a couple other, but mostly MicroStrategy.
Yeah, I not that long ago, I was doing podcast rounds, and I told people, look, after the halving, earnings are going to come out. When earnings come out and people realize that it's not as profitable as they said it was, the mining prices are going to go down. And when they do, you buy long call options. You buy as many as you possibly can. And I literally told people that, and now they're sitting on 500% on those options. And depending on what expiration you did, some of them are sitting at 100x because they were trading for pennies on the dollar.
Wow.
And it was before any of this price action. So now with that implied volatility to the upside, the premiums on the call options are going crazy. And the same thing happened in 2020. I did the same thing in 2020. So it's cyclical, and you can replay it. But with MicroStrategy, it's not going to be cyclical, because it's based on Bitcoin yield. That's
what's my understanding, was that my shit, the reason I haven't even considered selling or doing even listening to all of the noise is just my share, every share I have, even if they're printing more shares, whatever, every one of my shares is going to just continue to be worth more Bitcoin.
Yeah.
So to me, that's
accumulation engine.
Yeah.
It's a Bitcoin accumulation engine. And then what they're doing with their convertible notes is extremely interesting. It's basically a different version of a Bitcoin bond.
So, Mark, maybe you have more insight on this. My guest the other day was talking about this, and his thought was that this was actually like a systemic sell pressure with the bonds, because once these bonds once MicroStrategy hits that strike price, the people who own those bonds can convert it into stock, and then they're going to sell their stock. Do they have to sell that stock? Can they hold the stock? I mean, what are your thoughts there?
Yeah, I think the reason that they would convert, especially at a 55% premium, is that they're going to liquidate the stock. But the thing is that it works both ways. On the way up, you're building your premium to NAV. I think they're at like 3.2x right now. And then on the way down, you're just going to shrink that premium. So then for the people who continuously, like that's the difference, right? Like one of those is a trade, the other is an investment. So the investors are going to win, because the traders will come and go with the ups and downs. But the long-term investor is accruing more Bitcoin per share.
Yeah.
So if you see that premium get squeezed down,
that's the time
you want to buy. Yeah, it's like buying the discount.
So now it's kind of like not the time to buy my MicroStrategy. We're at like 2.3 to 3.
Well, I'm not sure that I would say that either, because when you look at some other companies and what they do, and they're trading at like 10, 20, 50. And you look at MicroStrategy at 3, they're accumulating engineered money. They're accumulating the reserve asset of the internet economy. They're accumulating the most pristine form of collateral in the world.
Yeah.
Now they're transforming it with different financial instruments that allow other companies and entities. These are the same customers, or I shouldn't say same, but these are similar customers of people's reserve. These are entities that either by regulation or by policy are not able to hold Bitcoin. Like take an insurance company, for instance. An insurance company can buy Bitcoin and put it on its balance sheet. The problem is that the rating agencies give you 0 credit for Bitcoin.
Yeah, they're going to lower their.
So they can't write a liability against it. But if they bought a U.S. Treasury.
That's like insane, though. Like that blows my mind how we're not. I mean, it's like the most pristine form of collateral in the world. I just don't understand it.
Well,
they haven't understood that yet.
People like you and me are always a whole cycle ahead, right? Like in 2016, we were telling people Bitcoin's digital gold.
I wrote an article about this. I think it was like a local paper. I don't know, like maybe I think it was like maybe 2 or 3 years ago, 3 or 4 years ago, talking about like Bitcoin as pristine collateral, and talking about like how it could be used for like mortgages and lending, and like, you know, hey, you've got a person with low credit history or reasonable score, like, you know, why not just like do the normal mortgage process, but instead of like denying them, say, hey, post like 10% Bitcoin to this loan. If like you own Bitcoin as an asset, like, you know, post that as an additional component to the loan, right? And that will get you the approval, right? Because then you'll have that collateral you can seize if they fail, right? If they fail on the mortgage or whatever. I just think it could be used to augment so many lending products.
That's exactly what we're doing at People's Reserve.
So talk to me about People's Reserve. Tell me what you guys are working on. And you mentioned this Bitcoin as the reserve asset of the internet economy. Touch a little bit more on that and talk to me about.
So actually, if you could pull up Jeremy Allaire from Circle, the head of Circle, he recently sent out a tweet. I think it's really interesting because he said 2025 is going to be the year that the world connects to the internet financial system. Now, I think he's being a little bit, pull up his Twitter, because he sent it out on Twitter, or X, I should say. Bad habit. I have bad habit of calling X Twitter still.
Yeah, same here.
So just scroll down a little bit, because he recently sent it out. And what? Yeah, there it is right there. 2025 will be the year the world fully wakes up and begins actively using the internet financial system. Now, I think he's talking about his USDC as the internet financial system.
Yeah.
There are multiple financial systems, centralized and decentralized, that connect via the internet. At the intersections of those systems, I like to imagine that's the internet economy. And that internet economy is a marketplace for true free market interest rates. That's what's happening here. A new market with free market interest rates based on Bitcoin collateral and over-collateralized lending, not fractional reserve banking, is now not only formed, but incentivizing the traditional market makers to come here. Because what they found out is that socialist, communist, price-controlled interest rates are nowhere near as profitable as free market interest rates.
Yeah. I mean, that's this whole idea of Austrian economics, right? And this whole idea of like interest rates being the price of money in an economy. It's like the ultimate aspect of civilization that should be capitalist, not socialized or communist, right? Is like the free market for money, right? And
so they say free
Hayek.
market, but we're not really a free market.
No, it's controlled by a bunch of people in a room. They just
But
make a decision. And
this
decide
internet
how to-
economy, it's an aggregate economy of the world. No one country can dominate it. No one country can outcompete it. No one country can write the rules. So you have this basically wild, wild west of financial contract where you have a free market price discovery on the interest rate on the cost of capital. It's actually based on the supply of money and the demand for loans rather than the stated rate.
Yeah.
That's anchoring that anchors all of these things down. And that is what People's Reserve exists for. We exist as a marketplace to attach the traditional world to the digital economy, to attach and give access to corporations and even people, right, regular customers, access to this domain that they don't have the technical ability to operate in or understand. You know, if you told somebody who just signed up for Coinbase 2 weeks ago, buy some Bitcoin and set up a delta neutral position and provide liquidity on Uniswap and Balancer, and by the way, bridge it over on Arbitrum, and you can rake in around 25% APY. Well, they'd be like, all I heard was 25% APY. But then they start doing all the studying of all of the technical abilities that they need to have, and all of the rule sets they need to understand, and all the protocols they need to interact with in order to generate that 25%. Forget it, it's gone. And that's what People's Reserve is here to do, but in a delta neutral fashion. That's People's.
You take a fee from doing that? So somebody will send you the Bitcoin and you will do that for them? Is that kind of what your goal?
No. We don't want to. No, we don't want to do that at all. So People's Reserve is actually a reserve of money used for the people. So that's where that idea came from. And Bitcoin bonds and self-repaying mortgages are not necessarily leveraging the internet economy, but our vaults do, that people can deposit to the vaults, and you can have like a delta neutral positioning. And this is really interesting. I'm sure your listeners will, especially some of the more sophisticated ones, will check this out. What you can do is you can go to actually, if you go to like CoinGlass funding fee, it's like CoinGlass funding fee, you can actually see the decentralized internet economy rates.
Yeah.
Yeah, there it is right there. And this is going to show this in 8 hours. So see right there, it says current. Just annualize it to 1 year so people can get an idea. Yeah, right there.
Beautiful. Yeah, go to 1 year. Usually around 10%.
Okay, so like let's say you want to go on DYDX, right? There's a good decentralized. You bridge your Bitcoin over there, and click it again so it brings green is actually bad, red is good. I hate that about it. So yeah, so on that AKT right there, which I'd rather have Bitcoin up there. Maybe you can refresh, but what you would see is that right now, yeah, there you go. Now go back to the 1 year to annualize it. There you go, 41.5%. So if you were a delta neutral market maker on DYDX, how you would do this is, let's say you buy $10 million worth of Bitcoin. You keep $5 million in your wallet. You take $5 million, you bridge it over, and then you go short 1x. Well, in that perpetual contract that people are trading on DYDX, they pay a funding rate. And when the rate is like this and it's red, the shorts get paid. When it's green, the shorts pay the longs. So it depends on the balance of the marketplace. So right now you can see that the market is pretty bullish that the price of Bitcoin is going to go up. And they're willing to pay funding fees every 8 hours that annualize out to 41% APY. So as a delta neutral market maker, if the price of Bitcoin goes up 10%, okay, my short position went down 10%, but my stack, which is long 1x, went up 10%. Yeah. So I still have $10 million. But what's left over? The funding fee that's paid to me.
Yeah.
So we're not here to bet on the direction of the price. Anybody who tried to bet on the direction of the price will be destroyed. We are delta neutral. We are price neutral. But we are a market maker because we're supplying liquidity to the marketplace for people who want to make leveraged trades. And they're willing to pay a fee for that. Well, that fee is a free market interest rate that fluctuates with the implied volatility of the marketplace and the overall bullishness or bearishness of the marketplace and the balance of shorts versus longs. Well, 41% is insane. I mean, you have to be an immoral, corrupt individual who wants to practice usury against people to get 26% in credit cards.
Yeah.
You can just be a delta neutral truth money advocate and rake in 41%.
That's wild.
It's insane.
So is this 41%? Is it like in a stable coin, or are you getting it in
no?
native yield?
That's actually
Bitcoin
paid
yield?
in Bitcoin.
So you're ending up with 41% more Bitcoin by the end of the year. Wow, that's phenomenal.
Yeah, and depending on which market you make, you can chase stable coins or you can chase Bitcoin. It depends what marketplace you want to make.
What are your thoughts on like all these different blockchains? Are we? Is your personal opinion we're headed for a multi-chain future? Are you a maximalist? I mean, where do you stand on the whole thing?
I'm definitely a Bitcoin maxi. I'm a Bitcoin maxi because Bitcoin is engineered money. And nothing else is money. So if anything is trying to compete with Bitcoin, it's a scam because we don't need a new Bitcoin. We have money. We have engineered money. It's the perfect form of money. We're beyond that. However, I do need tools to help manage my money. And rather than going with some bankers, yes, I'd rather have my counterparty risk as a decentralized smart contract that I can analyze, that I can audit, and that I can know what rights and abilities I have without having to ask permission from a trusted custodian. So I do believe.
So it sounds like you think there's some value in some of these other chains.
I do believe that. I do believe that 99% of them are shitcoins and scams. But I also believe that you need a domain like Ethereum.
Yeah.
The biggest problem Ethereum had, first of all, it used to be proof of work. Right,
I miss those days.
I do too, and I know.
So we can get even into a longer debate about proof of work and proof of stake, and just kind of like discuss the differences. But I think there is something really special about proof of work, right? This idea of like you said, there's all these costs. There's
a cost of production.
There's a cost of production there. There's it was really. Satoshi really modeled it like super well, and the miners have to sell. Like you don't want the miners mining all the coins. Like in proof of stake, it's like you just hold all the coins, and you just get interest on it. It's like the way the world works essentially right now, right?
Yeah.
But with proof of work, like you're forced. Like you said, miners are forced sellers. Like, and guess what? That supply goes out. People can purchase it. They can buy it. I mean, I think there's a beautiful design in that system.
Yes. That's now what most people have never heard of is called proof of transfer, and proof of transfer is an algorithm that Stacks uses.
Stacks. I've heard a lot about Stacks.
So
I'm trying to wrap my head around it.
Yeah, Stacks is proof of transfer is amazing because basically it makes Stacks like an anchor chain. It's anchored. In other words, you can't remember when Ethereum had its problem. Most people think Ethereum is Ethereum and Ethereum Classic is like some spinoff.
Yeah,
Ethereum Classic is the classic. It's the real one.
It's the real chain before they decided to roll
Ethereum is the
back
spinoff. Yeah, exactly. What did they do? They rolled back. Well, Stacks doesn't let you roll back because each not each and every block, but each chunk of blocks is actually written into the Bitcoin blockchain. So you'd have to change the Bitcoin blockchain to change and roll back Stacks. So you get finality and settlement. And I think that's really important because, and the other thing is they have something called SBTC rolling out. Now, what's really interesting is when I said earlier that you would bridge your Bitcoin, a lot of what happens right now with market makers is it's actually a taxable event to go from wrapped Bitcoin back to Bitcoin.
That's crazy. I mean, that's absurd.
Yeah, it's not like an in-kind type thing. It's not treated that way. And it should be because it's the same thing.
It's fucking silly.
Yeah. But it's a taxable event. So there's limitations to becoming a market maker because there's tax obligations, there's strategy, there's different things.
I mean, is it like, I'm wondering if you just like, because, if you think about it logically, it's like essentially, it represents the same. I don't know. I mean, I guess you could.
Well, because you have the asset backing the liability, but because there's a disconnect between the ecosystems, it's a taxable event.
That doesn't seem right. I mean,
I
feel like the IRS would not want, like, if they tried to mess with you and like you could basically force them to offer challenge them to go to court or whatever to make the decision final. It seems like they would just accept your accounting if you just made the argument, not created the taxable event. I don't know. I'm saying.
I'm not sure they'd accept it.
I think
you wouldn't get in trouble. I think you wouldn't get in trouble.
Somebody told me this, that they wouldn't.
But you'd spend all your profits fighting them.
Yeah, well, they said that they wouldn't want to take it to court because they wouldn't want to be forced to commit to that ruling. That's what somebody told me. So like a lot of times, like my understanding is if you just kind of like do, what you think is the best, what you think is right, like, and you do it consistently, like they're not going to challenge your methodology just because they don't want that. They don't want to put that as a final ruling. I think that
set a precedent.
Set a precedent.
Exactly.
Yeah, where they have to like stick to that, which is obviously doesn't make any sense.
Right. So SBTC, which is going to be like the bridge Bitcoin, but it's not really a bridge because it's the same ecosystem. The Stacks ecosystem is the Bitcoin chain.
I don't like. For whatever reason, I've watched like 20 videos on Stacks, and I just can't like. I don't know, maybe I'm just an idiot. I can't wrap my mind around how this thing works.
People get really upset with the token.
Yeah.
They get really upset with the token, and you know that's another angle that we can go down.
Yeah, I mean, I am personally not a maximalist. Like, I don't get upset with any of these things. Like, I think just, you know, free market, free ideas. Not everything to me is money. Like, Bitcoin is amazing. Like, that's, like you said, you kept saying like it's money. Like, for me, Bitcoin is like the hardest money ever. And like everybody I talk to is like, you know, that gets involved in crypto is like, focus on Bitcoin first, understand Bitcoin, allocate to Bitcoin. Like, that is my opinion. But like, I have fun on Ethereum, like degenning and buying NFTs and like fucking around, like doing all this stuff. Like, to me, like, that's not money. That's just like fun. You know, there's like little pieces of art, or, you know, messing around with DeFi, like all this other stuff. It's like, you know, not everything has to be like money, right?
Exactly. Well, you know what's happening?
So that's my thought.
Our generation has been disenfranchised. They expect us to invest in Nike and put more kids in sweatshops.
Yeah.
They expect us to invest in Lockheed Martin to send missiles out and start wars and kill people.
Yeah.
Our generation is saying, first of all, why am I going to invest in this index, which some of the companies in this index go against my core beliefs, and I don't want to support them and profit from what they're doing. And then at the same time, the upside is so limited. Like, at any time, the market could
like,
collapse.
You know, they've gone through like, you know, venture capital, pre-seed, seed raise.
You are the
Reg
exit
A, Reg
liquidity.
B, Reg C,
You're
Reg D. It's like, oh, and then finally, after like all the value has been generated and distributed to like the insiders, like, hey, like, you can go, come here, peasant. We'll give you permission to buy this on this, you know, stock,
Exactly.
your brokerage account or whatever.
That setup has completely...
We got to protect you from yourself, you know. It's like, you know, we're your daddy. We're gonna decide whether. But you can go to like, this is what makes me laugh. Is like, you can go to a fucking gas station and blow your whole paycheck on scratch offs. You can go to a fucking casino, get fucked up, and waste all your money. You can do all this shit. You can gamble where they get their little tax revenue from it. But like, if you want to like actually invest in a friend's business idea or do something, I mean, like, this idea of like paternalism, that the government knows what's good for you. I mean, this shit has got to end, and we have to push back on this, because this is just such utter fucking bullshit. I mean, that's the way I think about it.
That's exactly what crypto is. Yeah. Crypto is the pushback. Yeah. Crypto is, I'd rather start with a brand new company in an unregulated forum that allows me to get on the ground floor and allows me to establish something that has potential to change my life.
I'd rather buy a picture of a fucking dog token and say, fuck you.
I mean, that's worse.
That is wild.
I'm more DeFi. I'm definitely not an art guy. Yeah. Beauty is in the eye of the beholder. So pay for the art whatever you want, but I'm not going to buy any art. But I do believe that the internet economy, that decentralized finance ecosystem is real.
Yeah.
And I believe those governance tokens that would be more than governance tokens if there was a little bit of innovation in there that was allowed and also applied.
It's kind of, you know, there's this perverse element too, where like any kind of token or idea that actually has real utility, like real, gives the holders like real like benefit or accrual or fees or whatever, like that's a security. So like what we're getting instead is like these pure and utter fucking bullshit coins or whatever,
right?
Which they don't have to worry about. They're literally saying this is a fucking meme. Fuck off. Like there's no really value here. It's a picture of a dog. If you think it's funny, haha. You know what I mean? Like whatever. Yeah. But like, you know, the other coins that actually, you know, they're trying new ideas or different things or different governance. Like they got to worry about the actual SEC coming down on them. But you know, grandma can buy a picture of a fucking Shiba Inu or whatever.
Yeah. I mean, it's right. The legitimate business is ostracized, and then the scams are brought to the forefront.
Yeah, it's crazy.
And the solution of the government actually makes the problem even worse.
Yeah.
But this is our generation's kickback. This is our generation's way of saying, I'd rather take a chance on dog whiff fart than Nike, because dog whiff fart, I could turn 1,000 into 10,000.
Yeah.
And in Nike, that 1,000 isn't going to turn into 3,000 in the next 10 years.
Yeah, you're not wrong.
So why the hell am I going to? I want to get ahead in life.
Yeah.
And they can't get ahead in life. Nobody can get ahead of life because of the abuse of the system.
Yeah, no, you're right. It's institutionalized, you know, constant debasement and, you know, stealing purchasing power through inflation, printing money essentially.
By the way, they lie about it. I'm about to blow your listeners' minds. Pull up my X. Go to my highlights.
Are you going to take us to Shadow Stats? Show us the real inflation.
No. But although John Williams is an absolute monster, and I love his work. I dived a little bit deeper. Okay, so scroll down to when you see the, it's a big white chart with a whole bunch of numbers on it. Right there it is, right there. Yeah, this is what we want to talk about. And just the chart up is good enough. Yeah, there you go. Beautiful. Okay, so.
Everyone got their $1,200 check though. I mean, your monthly rent's up 16% every single month, but you got your $1,200 check, right?
So this is the scam. This is the scam. Real rates of inflation are significantly higher. So you go to Shadow Stats, you go to John Williams, you can go to govflation.com, which is the metric that I created to track this, which is based on the 1982 government equation. You know, there's Trueflation out there. What a waste of a good name. Trueflation is such a good name, but they came up with some proprietary equation that always spits out numbers that's lower than the government. It's like, you guys had it. You had it. You had the best domain, right? You had pets.com and you blew it.
Yeah, they should change it to fakeflation.
Yeah, they should. And then I'll take Trueflation for govflation because that's what we had to go with. So, yeah, GovMetric. Go to GovFlation real quick. GovFlation. GovFlation. Okay. So here's your official government. Yeah, you can tell I made this, right? Here, make data great again.
Oh, that's great.
So the official government headline, CPI is 2.6%, right? And now what's amazing about this data, I think this is the only thing the government actually does good, is they get raw data, right? Because people always say, CJ, the data is not fake. Yes, you're correct. The raw data is real. The equations that they're plugging that raw data into are heavily manipulated.
Yeah.
And on GovFlation,
I love how they just like, this month coffee went up 50%. So we're just going to take that out of the equation.
So we'll take tea because tea went down 2%. Yeah. And the breakfast domain, it used to have eggs, bacon. Now it's just all cereal and oatmeal. So it's a fraud. And what you see is the official government headlines. That's why I have Uncle Sam in the mask telling you what to do. Telling you what this is what the numbers are. The price is what I say it is. Right? 2.6%. But here's the real kicker. Real return. And you're going to hear a little bit of this at the meetup later, so I don't want to harp on it too much. But the real rate of return creates the incentive within the marketplace. When real rates of return are positive, you should save your money and lend it to the government because at the end of the year, you're going to be able to buy 2% more stuff.
Yeah.
So, of course, they want you to look at those numbers and say, yeah,
of course,
I should lend my money to the government.
Come buy some bonds.
Yeah, come buy some bonds, baby. Well, now look at the GovFlation headlines. Now you go back to the more accurate pre-substitution, the non-substitution cost of goods index that was created by the government and used in probably the most accurate form of CPI. CPI is 10.37%. When you subtract the treasury bill rate or whichever rate is highest on the yield curve, you get the real return, negative almost 6%. So you should not lend your money to the government. You should spend it or invest it immediately because the longer you wait, the less you're going to get. And if you wait a year, you'll get 6% less.
Yeah. Intuitively, that's, I've always been kind of like just been able to feel that like intuitively. But.
Right. Well, because you're paying your bills. Yeah. We can all, that's why it was like, the economy's strong. Says who? Says the TV? Have you seen my bills? Have you seen, because my expenses are going up and my cost of living is going up. Therefore, my quality of life, my standard of living going down. Now I can only take one vacation. Now I can't even take the kids over to Monster Jam. Now I can't do this. Now I can't do that because I got to pay for breakfast based on oatmeal instead of with eggs and bacon. Right? And it's like your quality of life, your standard of living goes down. But what this does is it creates this scenario. And then people ask me, why? Why, CJ? Why do they do this? Go back to that original chart.
Your sugar cereals with 75 unhealthy ingredients are going down.
Yeah. So now and your technical guy here is doing a killer job.
Yeah.
I mean, I'm running him all over, but you're killing it. So Paul, so bring me back
kudos,
to my
appreciate you.
To my ex, Paul. Bring me back to that chart that I had you first bring up. Yeah. Okay. Beautiful. So now this is Social Security. So Social Security is based and adjusted on CPI. It's called the cost of living adjustment. And every single year they measure the third quarter to the previous third quarter, and whatever that inflation rate is, your Social Security payment will increase based on that rate.
Yeah.
Well, you can see in black from 75 to 82, they were using the non-substitution based CPI. Well, WTF happened in 1983.com. That'll also bring you to GovFlation.com.
So is there one for 1983 as opposed to there's what WTF 1971, but is
that? Yeah, that's an ode to that. I'm not related with those guys, but I love the work that they did.
Yeah, they did some
And
work.
I said, hey, that's a really important question to ask. I see it on your beautiful consensus table over here, 1971. It's a really important question.
Can you find Satoshi on the table? Let me ask you a question.
No, it's too hard.
It's pretty hard.
John Drew told me I can't find it. So when you look back at that and you say, okay, oh my God, look at the difference. Look at some of those years, like 1999, 1.3 over to 7, or even in 2010 and 2011, 0%, but it was actually 9.8 and 9.1. So at the end of this, the average Social Security payment today in the United States of America is around $1,800. If they never change CPI,
it would be like 11,000.
It'd be 11,400.
That's insane.
That's how much that the quality of life and standard of living has been robbed from American retirees. Completely robbed to the point where you should be getting 11,400 a month, and if you're lucky to get the average, you're only getting 1,800.
But it kind of like makes sense if you compare the prices of today's things to what it was back in the day, right? I mean, you got so much more bang for your buck. You know, one guy on a factory job making $50,000 a year, it was like a house cost like $50,000 a year. Exactly. It was like, you know, that salary could buy you a house.
Exactly. Now you can't do that. And what's so sad about it is, and what's amazing is, if this were the case today, then Social Security alone, this year in 2024 alone, just 1 year of Social Security would cost $9.9 trillion.
Wow.
Our entire budget is around $7 trillion. So imagine if we had Social Security at 9.9 plus the rest at 7, we'd be spending $16 trillion.
Yeah.
So now you start to understand why the government is incentivized to control CPI, because it filters down into very important things, and it lowers their costs. It lowers the amount of money they need to print, but they're stealing from the American people. That's not the government's money. Social Security is taken from our earnings, and that's our money, and they're diluting it at an extreme pace. Only Bitcoin can protect us from that.
It's kind of crazy. I mean, you know, I think one of my guests the other day made the point that, like, you know, we got to figure out a different way to come at these entitlements. You know, and I know it's super unpopular, but like, if they just, instead of doing all this Social Security payments and all this, if they just like took somebody like the day they were born and like just, you know, put like $1,000 worth into like the stock market and $1,000 worth into like Bitcoin. You know what I mean? Like 70 years later or 50, 60 years later. I mean, some kind of version of a solution like that would be like, it's like seeds a tax account that grows for like, you know,
see,
50,
so now I
60
can
years.
finally answer your question. What is People's Reserve? What do you guys do? What the hell's going on over here? Your website sucks. I can't find anything.
I tried to go to the website, man. I'm not gonna lie. I couldn't really navigate. It was just
it's a
People's
gift.
Reserve. Yeah.
You're not supposed to know.
You got all these
about
other websites that work, but the People's Reserve website doesn't work. What's going on?
So, look, Bitcoin bonds are a hybrid debt equity product, and they do exactly what you just said. They combine U.S. Treasuries with Bitcoin, and it's a principal protected note. So it's a structured principal protected note with exposure to Treasuries and Bitcoin. But what happens is when you do this, not only does it unlock access for corporations and companies whose regulations and policies are keeping them from holding spot Bitcoin and self-custodying Bitcoin or even using a custodian.
So this is like a workworkaround, kind of like what Sailor's doing. It's like a glitch.
Yes.
Like a glitch in the matrix.
Because when they buy a Bitcoin bond, they're buying debt. They're not buying Bitcoin. So when the rating agency looks at it, they're looking at an unrated bond. They're not looking at Bitcoin. Doesn't matter what's in that product. Doesn't matter. It matters what the product is. And when you combine a principal protected note with a certain structure, it's a principal protected note. It's a debt note, and a debt note, an unrated debt note, gives you a certain amount of ability, especially for an insurance company, to use on their balance sheet to write liability against. So if they buy Bitcoin, they can't add any more customers. But if they buy a debt note with exposure to Bitcoin, the rating agency doesn't care. It's a debt note. They can write liability against it.
So this is super useful until they can just hold directly Bitcoin and get liquidity off that, right? Is that the idea?
I think the answer to that is actually no, because now we're talking about the performance of the note, because the reason you get to write leverage against a debt product is because the volatility is low. So it's not, Bitcoin's volatility is not going to change. So when something's super volatile, you can't write a lot of liability against it, right? Imagine an insurance company bought $100 million of Bitcoin. Then we have a hurricane, and $200 million of claims are coming in. But we're in the middle of a bear market, and the $100 million Bitcoin is now only worth $20 million Bitcoin, or 30 or 40 or 50 million.
Okay.
You get that 40, 50, 60% pullback, and that hurricane just happens to hit at that time.
Yeah.
It doesn't matter if it's Bitcoin. It doesn't matter if it's any other asset that's volatile. Any volatile asset is not going to be able to, it's not going to enable the owner of that balance sheet to write a liability against it. You need to eliminate volatility. So I don't think Bitcoin volatility is going to slow down anytime before 2140, anytime before this. The schedule's done. So we
hasn't volatility like come down over time? Like every cycle, it gets a little bit less. We get a little less volatility. I mean, it's still super volatile, but
we're less volatile to the upside. So we have this diminishing return theory, which I think is going to get put to rest, because when we go from 100,000 to a million, with the monetization. The monetization of Bitcoin will move us away from the commodity cycle. The commodity cycle worked the exact way you thought it would, with volatility to the downside there all day, every day to the cost of production, but then volatility to the upside dampening, because the more market participants there are, the lower those profit. Like the OGs like yourself in the beginning is like, man, I got 400% premiums on my Bitcoin mining. I don't care. I'm not selling this. Like, who cares? But now we have publicly traded companies that have a fiduciary responsibility to lock in those profits. Yeah. So the level of selling at that margin is higher, and it diminishes those returns in a commodity cycle, which is actually supposed to be happening. And then that profit is reinvested into expanding supply. We can't expand supply. And now you have diminishing returns moving with a higher cost of production. You're going to create this little cross. And when we hit that cross area, that's when price will go above hash rate. That's what I was saying earlier. Like right now, price is trying to catch hash rate. After the monetization of Bitcoin, hash rate's going to be trying to catch price. And we're going to flip flop. And that dynamic.
Can you explain? Because I've lived in this commodity cycle for, since I've been here. Explain what this monetization of Bitcoin looks like. Explain what you mean by that. Like, let's unpack that a little bit for our listeners.
Yeah. So I think it's the complete integration of Bitcoin into not only money systems, but into finance through debt products. So I think what Michael Saylor's doing with his corporate bond is very interesting. Of course, there's a lot more. There's so much nuance, right? The reason that there's not one central bank in the world is because no one central bank could control everything. So it's all bifurcated. No one company can control or service the entire world. So that's why Michael Saylor understands this. This is why he goes and teaches Microsoft. Some people would be like, why are you teaching them that? Aren't you afraid they're going to do it better than you or something like that? But he's the innovator. So they're playing catch up with him all day, every day. And people are going to be playing catch up with People's Reserve all day, every day, because they're copying and they're imitating. And it's a form of flattery, but they're not innovating. Michael's innovating. We're trying to innovate at People's Reserve. And when we integrate Bitcoin into the money system, into these debt products, especially the Bitcoin bond, because we will dive into self-repaying mortgage, but with the Bitcoin bond, it's a principal protected note, meaning I can go into an insurance company and say, how bad do you want exposure to Bitcoin? And they'll sit there and say, we'd love to own Bitcoin, but it doesn't fit into our business model. There's regulations that are going to prevent us from holding it anyway. And even if we could hold it, we can't write leverage against it. So it just doesn't make sense. It's too volatile for us. But hey, on a personal level, I'm invested. I believe in this, but I can't do this with this company. It's just not where we need to be. But you turn that magic internet money, emerging digital asset class into a debt product. And all of a sudden it's like, we need that. We need that on our balance sheet immediately, because what happens? You get principal protection. The way the bond is structured, it's 80% treasury notes, 20% Bitcoin. And what happens is at 4.5% over 5 years, the principal investment is recovered through the yield earned on the debt note. So if it's the Social Security fund,
roll.
If it's it's a free roll, literally.
Yeah.
I mean that's like hard for some people to fathom, and that's what has had jaws dropping to the floor. So wait a second. My downside is zero? Yeah, because if you buy a Bitcoin bond and the price of Bitcoin goes to zero, what's left, let's say the Social Security fund invests $100 billion. $80 billion goes into the US Treasury 5-year note, 4.5%. $20 billion goes into Bitcoin. After 5 years, that $80 billion with interest applied
is now
and accrued, it's now $100 billion.
Yeah. So you're only risking a little bit of opportunity cost.
Yeah.
If Bitcoin goes to zero.
But rates are already negative. So it's no more of an opportunity cost, right? Because you're already getting negative returns anyway.
Yeah.
But your principal is protected.
Yeah.
Now, what if Bitcoin price goes down 50%? Now, you and I know Bitcoin price can go down 50% in 1 day or 5 days, but not in 5 years.
Yeah.
It's not going to happen in 5 years because it's strategically designed to not do that.
Yeah, historically.
So, in 5 days, sure, no problem. But in 5 years, not happening.
Yeah.
So what happens if that does happen? What happens if we get negative 50% in 5 years? The Bitcoin bond, that 20 billion turns into 10 billion. So now the note matures at 110 billion. Well, 10 billion divided by 100 billion is 10%. And in simple interest terms, 10% divided by 5 years is 2% APY. So even if Bitcoin goes down 50%, the note matures with 2% APY. If Bitcoin price stays the same, the note matures at 4% APY. 4% is going to beat most of the rates, especially with the direction that we're going. But now what if Bitcoin does what you and I think it's going to do? What if Bitcoin goes 2x and it goes from 20 billion to 40 billion? Well, that's 40% divided by the 5 years. Now all of a sudden you're getting yields like we were talking earlier with the credit card companies. Like you have to be an immoral person who wants to practice usury against your fellow human beings to get this kind of return. But if Bitcoin's CAGR stays 60% over the next 5 years, the price will go 10x. That's 40% APY. The Bitcoin bond would mature at 40% APY. That's banana crazy. That's unheard of before. And by the way, you can get those kind of returns with no downside risk, with principal protection. And by the way, you can hold it on your balance sheet because it's a debt product, not a Bitcoin, not just Bitcoin as an asset. By the way, you're going to get points for that. So now you can write leverage against it. See, it's changing the dynamics. The monetization of Bitcoin is Bitcoin being used as the most pristine form of collateral to enhance money, to enhance debt, to upgrade and evolve these products that have not changed for thousands of years. And we're now finally starting to see it.
Oh, very interesting. What if so this idea of Bitcoin monetization, that's obviously like demand just goes absolutely parabolic. Supply is obviously constrained based off the mathematics of the difficulty adjustment and all these other factors that have been game theoretically engineered. At that point, you're saying hash rate is going to play catch up to price, meaning that like, you know, there's this, in my mind, I call it the golden age of mining. That's what I call it. I mean, that's like...
it's a good way to put it.
I don't know, may have talked about that with friends in the past or whoever, but like, in my mind, that's like the golden age of mining. How long do you expect this to play out? I know a lot of the hedge funds and stuff that blew up last cycle, there was this whole idea of the super cycle. Is that one and the same thing?
No, because I think a super cycle is just... It is what it sounds like.
Parker Lewis says gradually, then suddenly. That's another way to look at it. Or CZ and these other
I think that's
hedge
where
fund
we're
guys
at.
that blew up. They said super cycle.
During the
You're saying
gradual
monetization
part,
of money.
Yeah, during the gradual part, you have a commodity cycle, and that's why it's called a super cycle because it's an overperformance within the overall commodity cycle. But gradually and then suddenly. Notice how suddenly doesn't go back to gradually. It's one move from suddenly, from gradually and then suddenly. And once the suddenly part happens, there's a really great picture of the Detroit Road with one car and all horse and buggies. But we moved from gradually to suddenly.
Yeah.
And they took the picture 2 years later from the same exact angle, same exact street. One horse and buggy, all cars. So that's it. That's what's happening right now. We're going from that horse and buggy
S
moment.
curve where you're just kind of like right here and then boom.
Yeah, we're about to accelerate. The strategic reserve is going to be the final push that, in my opinion, that pushes us and initiates that monetization, which is the initiation of the suddenly part.
Yeah.
And that only happens once. And then once it happens, now we're being repriced. We're being absolutely repriced in monetary terms, not commodity terms. And that's why hash rate will go insane. Hash rate will go insane because the price of Bitcoin is so far above its cost of production. You're going to be rolling in so much cash that you're going to have the AI is not going to be able to compete because the profits that you get from AI are not going to be as profit as Bitcoin. So the demand for the chips, the only limitations are the physical limitations. The physical limitations
of pretty solid limitation in the sense of that, like you need to make these little silicon chips, whether it be AI or even the chips for ASICs. I mean, there's a limitation there. There's a limited amount of time to even be in on those chip fab lines. I mean, it's like you need like a $10 billion laser shining at a tiny little thing, like
So most people think that
nice. I mean,
Elon Musk wants to go to Mars because he wants to expand human civilization.
Yeah,
and I think that's his narrative in order to get the government checks to pay for it because it becomes a human thing rather than a business thing. But in my mind, he's going there for resources. Because we are limited on the amount of resources we have here, and the demand on the resources we have is going to create constraint. And he needs rare earth minerals. He needs rare things that we just don't have. We just don't have enough of them right now. This is why Taiwan is a big topic, because it's like China goes in there, then where do we get our chips from?
Yeah, it seems like it's definitely a capital thing.
And now the government is writing a check.
But apparently those rare earth minerals, I heard they're everywhere. It just like totally fucks up the land if you try to like extract them. Like we have tons here. We just like
you'll kill your own existence.
Yeah,
so
it's like it's just
you
interesting.
can't kill a dead planet, but you can kill a live planet. So let's go get the stuff from the dead planet.
Yeah.
I think that's his real mindset, because that's where we're going.
An interesting take. I think he's genuine. I mean, I think he really does want to do what he says he wants to do. I'll take the other side of that one.
I like Elon. Don't get me wrong.
I think
he's
he's gonna cut his own.
I just don't trust the guy.
I think he's gonna cut. Well, I mean, the expression I mentioned the other day on a pod. It was like, you live long enough to see your villains turn to heroes and your heroes turn to villains. Like that kind of like encapsulates things. Like Bill Gates for me was always more of like, I always like kind of admired him in a lot of ways, and then like now he's turned more into a villain in my mind.
Yeah.
Even though that maybe it is his intention, maybe it's not, depending on where you're at in the conspiracy rabbit hole. Like I think he's made some poor decisions and has lost the plot in a lot of ways, regardless of whether you think he's good or evil or whatever. But Elon is someone that I consider a hero now. Like I think the guy does what he has his flaws and imperfections, but
well, we wouldn't be having the hope we have now without him buying Twitter and giving a true free speech platform.
Yeah.
Later coming out and endorsing Trump after the assassination attempt.
Yeah.
All of that, RFK also being probably one of the most selfless politicians I've ever seen in my life, or even read about in history books, where he came out and told his constituents, I'm suing those states who are not taking my name off the ballot. Don't vote for me.
That's crazy what some of these states are doing. I mean, it's like one state's suing to keep them on, the other one's, it's so corrupt. I mean, it's like so unbelievable.
But so without Elon playing that critical role, I don't think we'd have the same hope we have today. So I'm very thankful to him for that. But he still has to continue to earn trust with me. Like he's got to build himself up to hero status.
To those whose much is given, much is expected. That's something my father always told me. So you're not wrong.
Yeah, amen. That's Bible right there. But look, I'm happy about it because money is now coming to the fore. The Overton window is shifting, and people never asked about money. They don't. For most people think dollars are actually money when they're currency. They don't even understand the difference between money and currency. So money, the Overton window is shifting, and money and currency is now within sight. And people are going to start asking these questions. Like they start asking, what about the fake news? What about this? What about that? And something that you thought was a conspiracy theory maybe 4 years ago before COVID.
Yeah, right.
Everybody now knows is that
I've had friends that were extremely plugged into the bio and biological fields and medical fields and all these things, and like I'm telling them 4 years ago, like, hey, like this Wuhan virus, like, hey, there's this Wuhan Institute of Virology here, right where the outbreak started, and they just so happen to be working on bat coronaviruses, and they just so happen to have all these failed reports of like terrible hygiene and terrible protocols by all of the people that came to that facility all over the world. And like, it just so happens that like, maybe 5 out of like the 8 scientists that were working in the lab were the like ground zero infection cases. And they're like, no, this is a conspiracy, blah, 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 blah. Meanwhile, Fauci's like, sending emails, running cover, lying about everything. It's like unfathomable what happened. But
crimes against humanity is what it is.
It really is. I mean, but
it backfired
wild,
on them
because
it got people to question the truth.
Yeah, yeah.
And
they lost their credibility. I mean, U.S. trust in media is like at 12%. I mean, it's like, that's horrible.
Lowest third, yeah.
It's like all-time lows.
So I think we're in financial COVID. I think the same thing that we saw during COVID, the manipulation of the data to paint a certain narrative.
Financial COVID.
Right? We're in financial COVID right now. The CPI is not what they say it is.
Yeah, yeah.
GDP is not what they say it is.
I mean,
real rates of return are not what they say
you get the readjustments of all of these metrics. It's like every single time they release a number, it's a lie. It's like they have to go back and like lower it. And like they lied to make it look better.
Yeah.
Oh, sorry, we lied, or we made a mistake.
Yeah.
That's the
correction.
But we have to issue a correction. It's like every single time.
It's narrative control.
I mean, it's just
it's narrative control.
It is
because they can release that information and they know everybody's eye is going to be here.
Yeah.
And they're controlling the narrative that way. And that's why I call it financial COVID. But look at what happened with medical COVID. We've now to the point now where people are like, my pediatrician kicked me out of his office because he went in and he's like, all right, hey, your son's due for his vaccine.
Yeah.
I said, if you come near my kid with a vaccine, I'll kill you. And I don't think he was expecting that.
He was like, probably not expecting that.
He like didn't know whether to laugh or like frown at me. And then after I didn't laugh, he knew I was being serious.
I mean, this whole thing of like just like trying to force everybody to do what you want. Like I'm pro like freedom. Like I'm all about like they did their Operation Warp Speed. They offered that as a product that people could use. Fine.
Hated that Trump did that. Hated that.
I loved it. I think it's fantastic. Give people the option, right? What bothered me was forcing everybody to do that.
Yeah.
Like I had no problem with the whole thing. Like, hey, rush it out, but hey, we rushed this thing out.
Just be honest of the risk.
Be honest.
Yeah.
Don't try to like force you're going to lose your job if you don't take this. You're going to do this. I mean, that to me was like, that was the evil. Using innovation to try to solve a problem, whether it, how well it worked or not can be debated, but like giving people the option, I think is a great thing. But forcing the narrative control, forcing people to take this experimental thing that, there's a reason why many of these vaccines like have been around for 40, 50 years. They figure stuff out. Maybe the first 5 years, we put some aluminum in this thing and we're getting some autism or whatever it may be, right? But like after 40, 50, 60 years, those perverse effects go down and down and down. Hopefully that's the goal, right? But like you rush something out, like me personally, like if I was an old 80-year-old person, I probably would have taken it to like, because COVID is pretty deadly to older people, but like a young, healthy guy, I'm not fucking taking that thing. Why the fuck would I take that?
Yeah.
I had COVID and like didn't even realize it, had no symptoms. Like, let people make their own fucking decisions. That was my thought on the whole matter, not, force the narrative control, lie about everything,
Well, you're a freedom maxi, like most Bitcoiners.
Yeah. I mean, that's how I felt about it. It was like,
But the other component is truth. You have to be truthful about it. And that's what's happening now with the currency. They're forcing us to save in this currency. They're lying about the numbers and saying the real rate of return is positive. It makes sense to lend your money to us when it doesn't.
Yeah.
So the result of that is going to be a loss of trust. And the only difference between inflation and hyperinflation is trust. I don't care if you go back to Weimar, Germany,
it's a gradually
Rome.
and suddenly in a different direction.
Yeah. And once that trust catalyst is triggered, forget it. You are moving from inflation to hyperinflation, and there is nothing you can do about it. And that's why I'm so happy right now, because I truly felt for the longest time we were on the brink of hyperinflation. But now with the strategic Bitcoin reserve, we have a chance to reestablish and rebuild trust, to get back to a truth money and to a truth financial system, especially if we move into decentralized finance, especially if we find a way for government spending to be tracked publicly on chain.
Auditably, yeah.
And audited, yeah. So we have a chance to reestablish trust. And I'm a patriot. I'm an American patriot. I'm a constitutionalist. There's
Same here.
nowhere else in the world that you can go to have the freedoms that you have here. And I want my kids to have those freedoms. And
Absolutely.
this land and these laws are worth protecting. And I don't want to see a hyperinflationary fallout with the BRICS countries fighting for power, vacuum power. I want the United States to turn this ship around. I want us to.
Freedoms are under attack. I mean, whether it be all the stuff, all the violations of privacy with the Fourth Amendment, whether it be the First Amendment, the government, using all these NGOs and whatever to do stuff that they're constitutionally not allowed to do, to tamp down on dissent, whether they're using big tech companies to censor people like Google, with all this woke propaganda nonsense that they bake into their search algorithms and the new AI models that are coming out. It's like, it's extremely Orwellian, and we have to push back here. And I think we need to return to the constitutional principles that made America what it is.
The fight just started.
Yeah.
And we need the doctors, we need the lawyers, we need everybody to step up. My fight is in the realm of finance. And my fight is I want to bring truth to finance. And Bitcoin is what enables that. So I can't speak to the other things that need to be done, but you're right. The fight is just starting, and it's the fight starting in each one of those rabbit holes. And we need leaders and innovators in each one of those rabbit holes to step up and do what's right based on truth. And based on just respect for other people.
There's it's kind of, that's exactly what you're describing is one of the reasons I started this podcast, right? It was like, I'm a big fan of like all the work the Cypherpunks did to lay the road to create Bitcoin and contribute to that cause. And they always had this quote, which was like, Cypherpunks write code, right? Where it's like, hey, we're not going to fight from within the system. We're going to fight without the system. And I thought that's awesome, right? But like, why can't Cypherpunks also fight from within the system, right? Why can't we do both?
It's a sick intro, by the way, on the channel.
Thanks. There was a couple Cypherpunks. I think Austin Hamill was one of the guys who did try to do this, right? Like try to be more active, advertise, why privacy is important, all of these things, right? So this podcast, I'm not really a developer, so I have certain skill sets, and there's certain things I can do, and I feel like I can bring people on like yourself to talk about the truth and talk about Bitcoin and talk about these ideas. And hopefully more people will watch and tune in and learn about them and why they're important and why they matter, instead of just slowly getting boiled like a frog. That's happened for so long for most people.
The thing is about a real Bitcoiner, like what people's reserve, our mindset is that we want to empower we the people. So the fiat system and the fiat mindset is about value extraction. It's about providing a service and extracting as much profit and value from that person as you can. I don't think in a Bitcoin system that company is going to last that long, because Bitcoiners aren't dumb and they understand value propositions. So we built this company with the idea that we're going to deliver value. It's
Gotta
kind
provide
of,
value.
remember what Trump said? He goes, "You're going to win so much. You're going to be like, please, no more winning. Stop with the winning." Like People's Reserve is going to deliver so much value to you. You're going to be upset at yourself that you were stuck with some of these other options that you had on the table. You're going to be so mad at them because you're going to realize they really were extracting value from. They weren't providing me with services. Those services were a mask to extract value from me, whether it's through a spread, through crazy fees, through all these different schemes that the fiat schemers come up with to extract value. No, let's be honest. Let's be open. Let's be honest. Here's the service I'm performing for you. Here's the cost. If you want to use the service, go right ahead. If you don't want to use the service, then don't. And by the way, our entire system is built on a loyalty program. This really grinds my gears. I'm not going to name names because I don't want to make enemies, but I've used a certain exchange for over a decade. And these people have collected hundreds of thousands of dollars in fees from me. And I pay the same fee that somebody who signed up 2 days ago pays.
Coinbase?
No, I'm not. No. So
Sounds about right.
What doesn't make sense to me is that these exchanges are not creating loyalty programs. They're not creating opportunities for their customers to demonstrate loyalty and then to receive some type of benefit for that loyalty.
Yeah.
And this is what's really exciting to me about crypto, because I feel like frequent flyer miles, different rewards programs and stuff, they can actually be like on chain.
Yeah, no doubt about it. I think you hit the nail on the head.
Yeah, and there's a big future there in that tokenomic economy, in my opinion, for rewards and loyalty programs and things that make sense. That no, it's not a security. It's definitely not a security because when you buy the token, you don't own any part of the company, and it's very clear that you don't own any part of the company. And it's disclaimed that you shouldn't pretend that it's equity.
These these clowns, Gary Gensler. I mean, they're so out of their goddamn minds. I mean, just
it's an attack. It's a war. It's a war.
Yeah.
But those headwinds with Trump getting in, Gensler's going to step down.
Yeah.
And right now, those headwinds have calmed down quite a bit. And after Trump gets in and this ball gets rolling, I think we're finally going to get some tailwinds.
Oh, I can't wait.
And we're going to see. You're going to start to see innovation that was just basically too scared to show itself.
Yeah.
Not that long ago. And it's gonna do what you said. It's gonna increase economic activity. It's gonna allow businesses to thrive. And these products, by the way, these financial products like Bitcoin bonds and self-repaying mortgages, because one of the biggest, most popular products in the world is called a mortgage-backed security. And it's what it is it's all a bunch of mortgages pieced together that are securitized. So you balance your risk by diversifying. Instead of writing one mortgage and a bank keeping that mortgage on the book with one counterparty, they package it together. And that one person might default, but since you're lending to 100 people in a security, that one out of the 100 isn't going to affect you. But if that one was on your book, and it was only one of a couple on your book, then it could crush you. Yeah. So they diversify to push out that risk. But in a self-repaying mortgage, like at People's Reserve, imagine where a product where you get a mortgage, and yes, there's a lien on your home because that's what a mortgage is. You're posting the home as collateral, and that's how you're able to get the money. But now there's an additional component that's being posted, which is Bitcoin. Yeah. And you can post Bitcoin at a certain LTV threshold, like a loan-to-value threshold, to get a lower interest rate. Yeah. And the more over-collateralized...
This was like what I was thinking when I wrote that article for whatever newspaper it was here locally. I was thinking exactly what you're thinking.
Yeah, so you're spot on in it, and now we've brought it to be. Now it's going to be a real thing. And early next year, people are going to be able to get self-repaying mortgages, and you're going to be able to get interest rates.
So will I be able to come to People's Reserve and do that?
Absolutely, you'll be able to.
I might be one of your first customers.
Yeah. Well, fair warning, we're not an equal housing lender. We're very discriminatory.
Oh, really?
In who we lend with, but all right. I like you though.
But past the cut.
No, so
considering I've been discriminated against about 100% of the time, and I've been in a, and I quote, prohibited industry is what I've been told.
So look, at our table, Bitcoin
Anything's
talks.
Better than that. All right.
Right? Bitcoin talks at our table because what we want to talk about is risk. And if you're going to post Bitcoin as collateral, you are eliminating our risk. We are very happy to lend you money at cheap interest rates when you eliminate our risk. And then, by the way, what ends up happening is the reason it's called self-repaying is because as the price of Bitcoin goes up, you have many different options within this product. And I think even before you understand the reward, maybe it's more important to understand the risk. What if price goes down? You're not borrowing against your Bitcoin. Your Bitcoin cannot be taken from you. The only way you lose your Bitcoin
is if you don't pay your mortgage.
Is if you default on your mortgage. That's the only way. So it doesn't if the price of Bitcoin goes down and breaches your loan to value threshold and you shift into a lower threshold, your interest rate goes up because the amount of risk went up for us, the lender. So will
you calculate in like, hey, this person's been paying for 3 years, they've always made their payment on time? Does that factor into your discussion, your thought there at all in the risk?
Yeah. So digital credit scores are a very interesting concept, and I think it's just getting started. So in our concept, no, we do not. It's Bitcoin and Bitcoin only, and it's LTV thresholds only.
I got you. Okay.
So we do not take into account that consistency of payment. We don't assign credit scores. Matter of fact, we don't even check your credit.
Oh wow.
Yeah. So some people within my
network,
Bitcoin
goes up, and now your loan's over collateralized. Your interest rate goes down
significantly.
Wow.
Or you can claw back. Like let's say you put 10 Bitcoin's 100,000 basically today. You put 10 in for $1 million. Bitcoin goes to 200,000. You can take back 5 Bitcoin and maintain your contractual. Yeah, keep the same interest rate. Maintain that contractual LTV agreement. You keep the same interest rate. Take your Bitcoin back. We're here to empower you. We're not here to liquidate you for your Bitcoin. Yeah. I don't want your Bitcoin. I want you to be empowered by your Bitcoin.
I get a lower interest rate. I might just say, well, fucking keep it there,
Exactly.
Lower interest
rate. Especially when it's not at risk of being taken from you. So that's an important concept. Yeah. The other thing you can do is, we all want to increase our quality of life and standard of living. And the way you do that is you allow your cash to work, your cash flows to work for you. So if your part of your cash flow has to be allocated to your mortgage payment, and we're in the middle of a bull run, you can get in there and set a customizable rate. I want 5% of my mortgage payment, or I want 50%, or even 100%, completely customizable all the way across the scale. And what we'll do is once per month, we'll dollar cost average sell the small portion of Bitcoin to make your monthly payment.
That's interesting.
So now all of a sudden, the portion of let's say you make $5,000 a month and you're paying $2,000 mortgage payment. Well, now you're selling your Bitcoin. You don't really know how to time the market right.
Yeah,
you know things are bullish.
You're doing the opposite. Your dollar cost average selling.
Yeah, but that $2,000 now can be reallocated. It can now be spent to increase your quality of life and standard of living. And that's what we at People's Reserve believe in. We want to create the tools that are needed in order for you to increase your quality of life and standard of living. Because when you do this, you don't need marketing. When you do this, you're going to tell the next person. Like when you get your self-repaying mortgage, the first thing you're going to do when you actually see it and understand it and sign on that line, you're going to be like, I got to tell everybody I know about this. I'm going to tell every single Bitcoiner I know about this because this is a no-brainer. And when you build products that empower people and make their life better, it sells itself. You don't need to convince anybody to use a product that's good for them. You don't need to convince people to go buy food. They know that they need to eat food, right? Well, you're not going to be able to convince people that they want a traditional mortgage when they can get a self-repaying mortgage because it just makes life that much easier.
I mean, if I just don't have to deal with the hassle of like 5 million people like giving me anal probes about every little payment I've ever made, and I can just say, hey, look, here's my tax return and that's it, and you just look at it or whatever it may be and like not have to get 50 colonoscopies about every little detail of my life, I think I would just do that just for simplicity's sake.
Yeah.
I'd even pay a higher interest rate just to not have to deal with it.
Right. Well, that's what we see in the marketplace right now. That's why you can borrow against your Bitcoin right now. It's for a convenience, right? Because you borrow against, there's no tax obligation.
Yeah.
And it's like, well, now I got to pay a premium to do that. But you're posting the most pristine form of collateral in the world.
That's my thought.
It's offensive to me that I have to pay a higher rate to borrow against the most pristine form of collateral versus I can go and tell them, oh, here's my assets, here's my net worth, here's my cash flow. I'd like to borrow $4 million. And they go, it's like, okay, we'll take that chance on you, 3%. And then I come over here, I say, look, I found this great piece of land and I want to build a mine there. And I needed land, labor, and materials, and I need $4 million. I'm gonna post $10 million of Bitcoin. Oh, sure, no problem. 16%. They're like, what? What are you talking about? I think I'll just go with the promise to the banker for just a couple percentage points versus the giving you my most pristine form of collateral, my most valuable asset on the asset side of my balance sheet, and then getting raked over the coals on what I have to pay to access that liquidity.
That's wild.
It's an insane concept. It's backwards, but that concept is going to be flipped upside down with the monetization of Bitcoin.
Yeah, I think if you can, I really like this self-repaying mortgage thing. I think if you can work in like someone's payment history in there to like build loyalty, like you mentioned, I think that would be the perfect product.
Yeah,
like, hey, this guy's been paying for 4 years, and
that would be a beautiful thing. Part of what we're doing at People's Reserve. See now, we're not like a normal Bitcoin company. I actually contractually assigned my intellectual property over to the corporation, and then they put me under NDA. So I'm only allowed to talk about Bitcoin bonds and self-repaying mortgages. But there is another avenue, there's another element, there's another vertical of the business, and it's based in real estate. And in real estate, we have built an AI real estate agent for you. And part of what that agent does is track credit. So I do believe like you're on to us. Okay. You're following this concept of developing a credit score that can be applied to these products.
Interesting.
On top of Bitcoin collateral. But I mean, if I say any more than that, I'm going to get in trouble.
I don't want you to get sued by your own company.
I know that would. Gosh, what a nightmare.
You'll end up like Elon Musk in the state of Delaware, where like 75% of his partners say that you deserve the pay that we promised you based on our contract. But there's some corrupt activist judge who Joe Biden appointed that's like basically saying,
"Hey, we saw you on this podcast, and you know."
That is like crazy.
You're out.
I will never incorporate any companies in Delaware.
Apparently, that judge is also the same judge that forced him to buy Twitter at the time, which backfired tremendously.
Yeah.
Thank God for that.
Well, good thing she's not a critical thinker. She should probably not be a judge anymore. She doesn't seem like she's a very good judge. That's my genuine opinion. All right, let me ask you some personal questions before we wrap here. I feel like these are always fun. If you could give your 20-year-old self one piece of advice, what would it be?
Oh man, damn! I got to do some math. So that's 14 years ago.
Buy Bitcoin.
I mean, shit. That's what I did. So I would be like, "Hey, good job, man." No, I think what I would really do, I would say, get married faster and have more kids. That would be my real solid advice. Like not financial. Like obviously financial, everybody would be better off if they bought Bitcoin. Luckily for me, when I was 20, that was 14 years ago, and that's when I started buying Bitcoin. So that worked out good. But the one thing that I really feel like I could have done and didn't do was that I could have started having more kids faster. And I don't care how much Bitcoin you have, you can't buy life.
Yeah, that's true.
There's something about the breath of life that creates so much value. You know, shame on those people who disrespect life and how valuable life is. That would be my one piece of advice. Get married sooner. Stop being such a little, you know what, and pretending you're some type of player pimp out there playing the game. No, find a beautiful woman that you're attracted to in soul and spirit. Marry her. Start making kids. That's going to pay off more dividends than any Bitcoin could.
Yeah, I think that's something I realized throughout my life. Whenever I was in a stable, committed relationship, I always performed better on all. I was always firing on more cylinders instead of just like constantly trying to pick up women.
Well, you have a team member when you have that wife. I mean, I could not do what I do at People's Reserve without my wife.
Yeah, no doubt.
Are you kidding me?
Same thing. I couldn't do the same thing.
You become a team, and a team is more effective always. And just that experience of that is worth it.
Some great advice. Who has been the biggest influence on your professional journey and why?
Oh, that's a really good one because there's some really good books that I've read. I don't want to name any one person. Let me put it this way. Study economics. Look at Hayek. I just said I wasn't going to name names, but
it's okay. No, the Austrian School of Economics. I mean, I've learned so much. I mean,
that has really unbrainwashed me. Yeah, unbrainwashed.
No, that was like kind of like the red pill, like exit the matrix moment, where like you kind of you read all about these different schools of economics in school, and then when you go down the Bitcoin rabbit hole, you discover Hayek and a lot of his ideas in Austrian economics and von Mises, and you really go down that rabbit hole. But it's still all just like academic, right? And then the real red pill moment for myself was when COVID was going on and they're just printing all this money, and all the talking heads on TV are just like, this isn't going to cause inflation. This isn't going to cause inflation.
Transitory.
Yeah, it's just transitory. All these different things. And like, if you had studied like Austrian economics, it's like Austrian economics 101 is like, of course this is going to cause inflation. Yeah. And like, all of a sudden then they're like, oh, this is supply chain and all this, that, and the other, and like saying all this stuff. It's like, you just printed 50% of all the money that's ever existed in like 1 year, and you don't expect there to be inflation. Like, it's just basic, like so basic.
That understanding changed my life.
Yeah.
Because thankfully I had that understanding long before, like what Jeff taught me back in 2014 and 2015. And I was able to apply that understanding during COVID. So when the markets were selling off and Bitcoin went down to like 3,400, I think it was down so low that you couldn't even log into BitMEX and lever up. Like that's how crazy things were at that time. But yeah, no, that was fun being part of the BitMEX leaderboard. But doing that kind of confident trade where you're putting large amounts of capital deployed at a time when people are afraid and there's a lot of uncertainty in the air, those are the moments that change your life.
Yeah.
And for me, you know, I loaded up on long dated calls across the whole board on levered ETFs, on like 3x levered ETFs.
That's dangerous, man.
Yeah, absolutely.
Even just like little fluctuations can crush you.
Absolutely. But my expirations were far enough out because these people were selling calls, and in their mind, the world is ending. So, TNA to $150 when we're at like $40. Sure, I'll sell that. I'll rake that premium from you all day. Well, it turns out TNA at 3x ended up being like 270 or something like that. So we were in the money with like 9 months before expiration. And this was across the board.
Wow, that's
so
fantastic.
Deploying capital based on that Austrian economic understanding of how are we going to get out of this?
Yeah.
You know, the world's not ending. How do we get out of this? That was life-changing. And I think that helped put me in a position, like before I had nothing to worry about. Then I had time to do like whatever I wanted.
Yeah.
And that's where it accelerated.
All right, final question. Outside of Bitcoin and finance, what's something you're passionate about that might surprise people?
Well, I would say Jesus and the Bible, but that wouldn't surprise them because I always talk about that. Okay, outside of Bitcoin and finance. Oh, that's really tough. You know, what's really funny is I play a lot of sports. I played hockey in college, and I grew up playing sports. I'm kind of like I grew up and I started writing right-handed, and my dad forced me to be left-handed.
Really?
So I'm like ambidextrous.
Oh, that's awesome.
So like layups on each side, no problem. Catching over the shoulder each side, no problem. And I really enjoy it. Like I really enjoy sports. But you know what I hate? I hate watching sports. I cannot stand watching sports.
For me, it just depends on what's going on. Like what's the game?
I can't do
it.
It's a gladiator game.
Do you play fantasy football?
I used to.
That'll make you
I used
watch
to be
sports.
a die-hard fantasy football player.
I'm a big fantasy guy.
Yeah.
I've got like 3 different leagues, 4 different leagues, all sorts of different.
Oh my gosh, ESPN all the way across the board, 4 or 5 teams. Anywhere from $50 to $500 buy-in. Absolutely.
Yeah.
But then I grew up.
I'm not there yet.
To me, it's a gladiator game. I cannot help but look at it and just see it for what it really is, which is a distraction. So if we can fix money and we can fix all these other things, then I feel like it's fun to go off and enjoy those things. But until these problems are fixed, until my kids' futures are secure,
Your kids play sports?
In truth,
My kids are in sports.
So
I watch a lot of that.
I have a 12-year-old, I have a 5-year-old, and I have a 3-year-old. So the 5-year-old and 3-year-old are starting to get into soccer.
Same. I have a 6-year-old and a 12-year-old right now.
Okay. What's the 12-year-old do?
He's football, soccer.
Okay. So I got a girl.
Baseball now.
She played soccer and then she got into gymnastics. So now gymnastics is kind of her thing. So that's what I'm saying. If you're going to play sports, sign me up. I mean, I'll come play flag football with you on the weekends.
That's awesome.
I love that.
Yeah.
But if you ask me to come over and watch a football game with you, I'm not even going to answer the phone. Like I'm not even going to answer the text. I just can't do it. There's something deep down inside me. So it's a good question. I truly enjoy sports, but I have to play them. I can't watch them.
Yeah. So for me, it depends on the sport, and it depends on the game, it depends on the teams, it depends on the scenario. So, sometimes I need a distraction for my life.
Someone told me the other day, they're like, "You gonna come over and watch the game?" I think it was my dad. He's like, "You gonna come over and watch the game?" I said, "What are you talking about?" He goes, "It's the Super Bowl." I'm like, "Oh, sorry, I don't care. Enjoy it." Like that's my. I've gone so. I went to the bottom of the rabbit hole. I planted some TNT. I blew it up and went deeper. And then I created a beautiful studio like yours and put out some great seats and put out some materials for people to come learn with me.
And you want me to leave that hole and go into this stadium with a whole bunch of people drinking beer and
Are you not entertained?
yeah. That is the perfect cap right there.
Let's cap it, man. How can people get in touch with you?
Yes. So by the way, thanks for having me. This has been an absolute pleasure. This is amazing setup you have, and the work that you're doing is so important to the industry for people to hear voices and to understand where we are and what opportunity we have moving forward. So thank you for having me.
Oh, thanks for coming, man. This has been awesome.
It was a pleasure.
You never know what you're going to get in these conversations. And sometimes it's like, you go in, you're like, oh, it's going to be an average conversation. And it's like, holy shit, this conversation was fantastic.
It was.
We went down some awesome rabbit holes, talked about stuff that you didn't even expect that we talk about. So,
Yeah.
But there was a lot to gain from this conversation.
It was great. It was fantastic. So for those of you out there listening along, you can follow me on X. I'm most active on X. I have a Facebook, I have Twitter, and Instagram, but I don't really. The way I have
X is pretty much just like the hub for any kind of
post on
intellectual
X.
Yeah, that's it.
And then I have a media guy who takes my X posts and blasts them out over all my other things.
I have a media guy who does both of those things for me.
So it's like, if you see me say something on Facebook, just know I probably said it on X like 2 or 3 days before.
Yeah.
So X is the best place to follow me, at CJ Constantinos. Also at People's Reserve. Go ahead and follow them. Keep an eye on what we're doing. And of course, at BTC Fair Value, I'll share charts and let you know where we are in the cycle. Those are the best ways.
Well, CJ Constantinos, it's been a pleasure.
Absolutely.